Everybody. Uneducated Economist here. So in today's video, we are going to be talking about the $6.6 trillion Fed flip. This, of course, is talking about the Fed's balance sheet and how it is that they are ending the quantitative tightening program, which is essentially reducing the Fed's balance sheet. And a lot of people have interpreted this as being a reversal to quantitative tightening, which would essentially be quantitative easing, in which that the Federal Reserve would be printing up money and buying assets. And now, of course, that isn't what's taking place right now. What they are talking about is the ending of quantitative tightening, which is the reduction of the balance sheet when they allow treasuries and mortgage-backed securities to roll off the balance sheet, to say when they come in, when the maturity comes in, instead of taking that and rolling it over into more, they essentially pull it off of the out of circulation. So they're pulling not only liquidity out of circulation, but then allowing the treasury to come off the balance sheet itself. And so as people are looking at this ending, thinking to themselves, okay, the Federal Reserve has flipped. They are now going in the opposite direction. That is not the case. It's like stopping, not turning around, just stopping. Now, with the idea that they are reducing interest rates going into the future, people now have it in their heads that they are moving into an easing policy. Again, this is inaccurate. They are still in a restrictive monetary policy, which means that the Fed funds rate, even if they were to cut them, well, I guess it would depend on how much they cut them, but even if they were to cut them by the 25 basis points, or maybe even the 50 basis points, or even the 100 basis points, they still may find themselves in a restrictive monetary policy because of the position to the neutral interest rate. Now, I've tried to share that many, many times, but when you find articles such as the one that I leave down in the description talking about it's over, Wall Street is quietly gearing up for a $6.6 trillion Fed flip, and of course it's trying to promote Bitcoin as Bitcoin price suddenly soars, and of course this is all to try and sell the idea of Bitcoin. But some of the things that they bring up in here, I think, is just very, accurate to the way that a lot of people feel about the Fed and the money printer and the expansion of the balance sheet, or what it is that's happening within the money supply itself. It says here, starting in next year, we are going to see an acceleration of money printing, at least out of the United States. There's nothing out there that says that. That is complete assumption. Complete assumption. Right? Starting next year, we are going to see an acceleration of money printing, at least out of the United States. This is Arthur Hayes, the co-founder of crypto derivatives pioneer BitMEX, who went on to launch the Maelstrom Investment Company. Now, that, again, is what I think about when I hear news like this. When I hear people saying, oh, man, it's going to be firing up next year. You're going to see the money printer go. Now, saying it won't. I'm not trying to say it won't, but there's nothing out there. There's no evidence to show that. The Federal Reserve hasn't promised that. There's nothing within monetary policy says that they're going to do it. There's nothing that came from the Federal Reserve that says it. Nothing, right? None, right? It's a complete assumption. It goes on to say here, quantitative tightening is over. They are going to be releasing trillions of dollars into the mortgage market. They're releasing trillions of dollars into the mortgage market. I'm not sure exactly what it is that they mean by that, but when the mortgage-backed security comes due or gets paid off to the Federal Reserve, they're going to roll it into another mortgage-backed security. They're not going to expand their operation, and they're not going to let it slip away from the balance sheet. That's not unleashing trillions of dollars. I don't know where that comes from a balance sheet expand. That's not the case. Right? Again, it's a complete assumption. It says here, quantitative tightening is over. They're going to be releasing trillions of dollars into the mortgage markets. Rates are coming down, and so the environment is ripe for appreciation assets. Okay, well, appreciation of assets. I do agree that it's ripe for the appreciation of assets, but it's not because of all of a sudden there's going to be a bunch of like quantitative easing or money printing coming from that. all the money has already been printed. It's finding its way into those assets as we speak. And so I can only imagine that's going to continue to be the operation when you assume that they are going to continue on doing the things that they are doing. Now, when I say that, I mean trying to elevate the inflation expectations. And now we've talked about that many times here on this channel. A lot of people disagree with me, but that's okay. I've been incredibly confident and accurate in everything that I have been describing from monetary policy because I'm describing it from the Federal Reserve's own words. It's not even ones that I'm making up or getting from other economists. This is them telling us that they were looking for elevated inflation expectation. They totally got it and used it. Says here, our long stated plan is to stop the balance sheet runoff. Reserves are somewhat above the level we judge consistent with ample reserve conditions. That's what Powell said. Now, a lot of people have gotten really excited about the idea that the ample reserves are no longer ample. In fact, it's commented here from Bank of America, Mark Cabana, who said, this is quoted, markets at current or high levels should signal to the Fed that the reserves are no longer abundant. Now, a lot of people get very excited about that when they hear about the money markets or the repo facility and all this other stuff and saying, oh man, just take a look out there. The reserves are no longer abundant. Well, it wasn't that long ago we were working in a limited reserve system. It wasn't only until essentially COVID kicked in, I mean, in great financial crisis, but just prior to COVID, we were operating in a limited reserve system in which that the banks in an overnight lending rate was determining the effective fund rate. So at the end of the day, there was a limited reserve. Some banks at the end of the day were in need of reserves. Some of them had excess reserves. The ones who had excess reserves would lend them to the ones who were in need of reserves. This overnight lending rate that they would do was the effective fund rate. When the Fed says, hey, we're setting interest rates, that was the interest rate that they were setting, that overnight lending rate to establish the reserve requirement levels that the Federal Reserve had. There was a limited reserve system. So if they wanted to adjust interest rates, they would buy or sell treasuries off these big banks, increasing or decreasing the reserve levels of them in order to achieve the overnight lending rate that was that was within line of what it is that they were looking for the Fed funds rate. The abundant reserve system is only a feature that's been here for the last 5-ish years, since COVID, essentially. So going back to a limited reserve system would not be like out of the realms of possibility as the way they were operating up until COVID. So it's not like, some big scary event. I don't know why people freak out about this. It's just like, to me, it's just like, yeah, it's a sign of tightening within the system and the removal of the reserve, the abundant reserve going into a limited reserve is a very cautious thing to step into. If we actually go there, is going to be a very questionable thing on its own. And I honestly don't think that this is the direction in which that it's going to go. But even if it did, it's not like it's that scary. Again, no longer working in this abundant reserve system. You're going to have to create a bunch of abundant reserves. It's simply not the case, Let's see here. Oh, here's the other one. Given the latest news on layoffs, some analysis may be wondering if the central bank should go for a bigger cut. If not this month, then maybe in December. Again, this is a lot of people are so hyper-focused on the labor market. It goes on here, quote, to say, the Federal Reserve has made it clear that it is far more worried about the labor market than it is about inflation. And I kind of agree with that they have said that. But when I look at where it is that inflation is comparatively to what it is that the Federal Reserve was looking for, they had said for quite some time, now this isn't the case anymore, but for quite some time, they said that they were looking to have inflation moderately above 2% for some time to make up for the fact that they failed to achieve a 2% target. Now, even today, the 2% target is a 2% target over the long term, right? The long run goal of 2%. The 2% is not an achievable goal. It's not. Never once in the history of the Fed existence have they ever maintained a 2% inflation. Never. Never will they. There's no belief that they should. Anybody who says that that's what they're going to get to and stay there is delusional. They can't. They never have. They never will. They go for a 2% long run target. Right? They want your expectations locked in at 2% over the long run. And understanding that is the key to the monetary policy, because monetary policy adjustments are not necessarily the effective tool within the economy as much as it is the expectation of what those cuts will do. I've tried to share that many times on this channel, that more talking about it, how it is that they plan on dealing with the economy going into the future, and the discussion about that has more of an impact on the economy than the actual adjustment of interest rates. The interest rate adjustments take 6 months to a year, maybe even longer. There's a lag period behind it. But the impact into markets are immediate. And they use that. They use that ability to manipulate the markets through the perception by conducting themselves through narrative statements in the mainstream media. Right? And it's not just in the mainstream media, it's all over. The people spread the information themselves. I mean, just think about it right here, right? This article itself is trying to suggest that the ending of quantitative tightening is somehow going to cause a bunch of money printing. Releasing of $6.6 trillion. I'm not even sure where the hell that comes from. That's what the balance sheet is, but they certainly don't have that much in mortgages. Right? And to think that that's all of a sudden just going to get relinquished into the mortgage market. I mean, what did he say there? It was just like it was complete rubbish. What was it? I don't even know where it was now. I just like, okay. Oh, here we go. The Fed's quantitative tightening program, which began in 2022, has reduced the Fed's balance sheet to $6.6 trillion. Oh, I'm sorry, that's not the one. Where is that quote? I can't even find it now. That's funny. Well, this article ain't that long. You'd think I would be able to find it a little easier than that. Oh, well, it don't matter. Oh, there we go. Oh, just releasing trillions. They didn't say 6.6 trillion. Okay. Quantitative tightening is over. They're going to be releasing trillions of dollars into the mortgage markets. Yeah. I don't know where that comes from. They're not like that like where in the world did they make that up? It's just beyond me. And yet I hear like similar statements, maybe not that exact one, but stuff like that regularly out there. And I'm like, is anybody else like really listening to the Fed and what it is that's really going on out there? I mean, I understand that for a lot of people, when they hear stuff like, I think even in this article, yeah, it says here, gold and silver are really being purely valued on fiat debasement. Like gold and silver, you don't have the demand going up from all the people who all of a sudden want to run in there and grab some. You're going up because purely off of fiat debasement. And I'm thinking, well, why is lumber going down if it's fiat debasement? Wouldn't lumber be going up if it was fiat debasement? I mean, I understand that you can pick out gold and silver and say, oh, that's going way up because of fiat debasement. And I can say, well, it might be the concern of fiat debasement that is causing people to go into gold and silver as a safe haven because they don't want to be in the dollar, because they've been reading articles like this thinking, man, the fiat debasement is causing gold and silver to go up. And I'm thinking, well, maybe in a psychological effect it is. But if it was fiat debasement, then you would see everything going up at the same time. Like lumber, which is going down. It's at $580 per thousand. It was at $660 per thousand just a couple of weeks ago. Right? The fear of tariffs caused the futures price of lumber to accelerate. But when the tariff was implemented, right, which wasn't that important or that big of a deal, because that's not new to the lumber game. It's the same game they've been playing since the 80s. So to see it happen was not a surprise for anybody who plays in the lumber game, but it made real nice news articles for people who wanted to sell that. So one did a great job of that. But ultimately, what did we see happen from them? We saw lumber futures fall. I mean, they're closing here in a couple of, like 3 weeks or something like that. And the lumber futures, I doubt, are going to have any kind of increasing demand over the next few weeks. If anything, it's probably going to go down. So it's nice and easy to say, oh man, money printer go burr, prices go up, quantitative easing is ending. That means money printer go off. You ought to see gold and silver go up off of the fiat debasement. And I'm thinking to myself, man, none of this stuff is right. I mean, don't get me wrong, money like gold and silver might go up, and don't get me wrong, fiat might get debased, and I mean, there's very little doubt that both of those, that both of those are going to occur. But to blame one on the other, or to look at one and say, this is right. I mean, the sun came up today. That's why we have fiat currency. It's just like, why to relate these two? These two are two different things that you can look at. Understand them from two different perspectives. Understand that the Federal Reserve is still in a restrictive economy, even if they end the quantitative tightening. It doesn't mean quantitative easing. That's not just because they end the quantitative tightening doesn't mean they're going into an easing program. They just stop. Right? They stop unwinding the balance sheet. And so to maintain a balance sheet is one thing. To expand the balance sheet is one thing. Quantitative tightening is one thing. And to try and say, quantitative tightening means trillions of dollars are going to come pouring into the mortgage market. And I'm like, I mean, unless trillions of dollars were pouring off of the balance sheet at at the time, then it's not the case. That's not reality at all. It's easy to see what the Federal Reserve is trying to do. The labor market, although is concerning in the direction in which it's headed, is still historically low unemployment. I mean, just bring up a chart of it. Federal Reserve, type in unemployment and type in capital letters FRED. Right? You'll bring up a chart of the Federal Reserve's unemployment. Now, I get it, and I will agree with a lot of people out there that you should not follow the Fed's numbers as accuracy, but it doesn't really matter if you're trying to follow the monetary policy, because that is what the monetary policy is looking at. That's the people who are in charge of monetary policy. We can't conduct monetary policy, and whether or not the number is accurate or isn't accurate makes very little difference to understanding what it is that they plan on doing with their monetary policy, with their numbers. Right? It's not my policy. It's not my numbers. It's theirs. But I do have to make a decision based off of their monetary policy. So understanding their monetary policy in this sense then gives you a much better understanding of how it is that they are conducting themselves and what it is that they're truly looking for. All right? I mean, you think about it. They are looking for interest rates to be elevated off of the lower bound of zero where they could not operate. The Fed, I think Ben Bernanke probably described it best because he said it so many years before it actually happened. Let me bring it up here. Right? Bernanke's speech on curing deflation. The title of the speech is Deflation, Making Sure It Doesn't Happen Here. This is the remarks given on November 21st of 2002. So many years before the great financial crisis. Way, way ahead of time. Ben Bernanke says, we got issues, yo. We got issues, and we know how to deal with them. We know how to deal with these issues because the problem that we face is well understood in advance. And this is where I think a lot of people have misunderstood what it is that the Federal Reserve is up to, because they don't think that the Federal Reserve understood what it was that was happening, even though Ben Bernanke explained it well ahead of time. So far ahead of time that he actually has called out quantitative easing years before it ever took place. Something else he brings up in this speech, what happens, or what it is, not necessarily what happens, because I don't know if anybody really knows what happens, what it is that the Federal Reserve is going to do when the U.S. government debt is no longer the feasible option for buying assets to put on the balance sheet. He addresses that issue. I don't know how many people understand how important this is. See, the Federal Reserve, every time they go and do their money printing program, their quantitative easing, which they're not doing right now, they're ending quantitative tightening. But if they were to fire up quantitative easing, they have to buy an asset. That's the problem that they face. What asset do they buy? They got mortgage-backed securities and U.S. Treasuries. Those are the two main assets that they buy. If they continue to buy the U.S. Treasury assets in the fashions that they have with the quantitative easing, they are going to send the United States on an unsustainable debt. They're already on an unsustainable debt path. They will put them in unsustainable debt. Right? Now, I'm not sure exactly how far away unsustainable debt is away from being on an unsustainable debt path that is reversible, apparently. I mean, I don't know if that's exactly the case. I don't believe it, but according to the powers that be out there, the path is reversible, but it would send us into an unsustainable debt that we are not there yet. However, expansion of the balance sheet would most likely do that. So the Federal Reserve knows that the expansion of the balance sheet through the purchasing of U.S. Treasuries is not a feasible idea, right? They know it can only happen so many times, and then that's it. Boop, the government's done. They can't work anymore. They're no longer in operation. Right? This is the scariest part of it. But to understand that the Fed knew it from the very beginning, they knew. They knew that they were going to be facing these issues. See, listen here. This is how it goes down. As I have mentioned, some observers have concluded that when the central bank's policy rate falls to zero, so that's when the Fed goes to zero interest rate policy. Again, this is Ben Bernanke talking about it 6 years before it happened, almost 7 years before it happened. Falls to zero, its practical minimum. Monetary policy loses its ability to further stimulate aggregate demand and the economy. And that's the point. Operating at the lower bound of zero no longer works. Like the Fed is done. What's the word? Kaput, right? Whatever word you want to put in there, they're done. They can't operate anymore at the lower bound of zero. They fail to adjust interest rates anymore. It doesn't stimulate the economy. It cannot spark aggregate demand, right? So he says it right in here. I mean, he goes in and talks about it, quite a bit. Let me see here if I can find. Let me see. Because central banks conveniently conduct monetary policy by manipulating the short-term nominal interest rate, some observers have concluded that when the key rate stands at or near zero, the central banks has run out of its ammunition. Run out of ammunition. That is, it no longer has the power to expand aggregate demand and hence the economic activity. It's over. It's done. It's an end game. See, this is why the Federal Reserve has no intentions on lowering interest rates, because they lose their ammunition when they do. They figured out ways that they can talk about their interest rate adjustments to get more effect out of the economy, to spark aggregate demand. Right? It's true that once the policy rate has been driven down to zero, a central bank can no longer use its traditional means of stimulating aggregate demand, and thus will be operating in less familiar territory. See that? See, people are so focused in on those interest rates. They're like, oh, they're going to have to adjust interest rates because they don't have any other choice. They're going to have to do it. And I'm like, and adjust interest rates to where? To zero? Where they have no more ammunition? No, I don't think so. I don't think so at all. See, they figured out a way that they can still deal with the economy even though they don't adjust interest rates. They call it forward guidance. They call it jawboning. They call it signaling. And my favorite, I call it credible threats. Right? Curing deflation. The conclusion that deflation is always reversible under a fiat money system follows from some basic economic reasoning. A little parable may prove useful. Today, an ounce of gold sells for $300 more or less. Isn't that incredible to think? Just in 2002, it was $300 more or less. Just amazing. Today, an ounce of gold sells for $300 more or less. Now, suppose the modern alchemist solves the subject's oldest problem by finding a way to produce unlimited amounts of new gold at essentially no cost. Moreover, to begin massive production, moreover, his invention is widely publicized and scientifically verified. And he announces his intention to begin massive production of gold within days. What would happen to the price of gold? Presumably, the potentially unlimited supply of cheap gold would cause the market price of gold to plummet. Indeed, if the market for gold is to any degree efficient, the price of gold would collapse immediately after the announcement of the invention, before the alchemist had produced and marketed a single ounce of the yellow metal. That right there was the tool that he was describing the Fed was going to be using when they hit the lower bound of zero, a hypothetical gold machine that they would deploy into the market's perception. There was no gold machine. They didn't have it. There was nothing that actually existed or was created, but the market participated within the idea of what it was that could possibly come from the future based on the credible threat of the gold machine. This hypothetical gold machine. You want to see evidence of it? Here, let me show you guys. How many we got here? 407 people. Keep watching, guys. I'm going to show you something really good here. Where is it? Oops. I got to find the speech here real quick, guys. Okay. So, here's evidence of the gold machine. Here's how the gold machine works. See, the gold machine is a hypothetical idea of what it is that could possibly be delivered out there to the market that would adjust the pricing, right? And so to think about this gold machine and how it would operate, how is it that they could deliver information that would all of a sudden fire up the price or lower the price? Right? It doesn't matter. It's how they deliver the information. Remember, it's a hypothetical machine that has a real reaction. So let's look at this machine. It's not a gold machine in this case. This is the corporate debt lending facility machine. Just like they were going to manipulate the price of gold, here they manipulate the price of the corporate debt. Those bonds going to the corporations, those junk bonds. Here it is. The Federal Reserve used their gold machine in order to deliver money to the corporate debt. Check this out. This is the most incredible. Nobody talks about this. This is the only channel you will ever hear this information. Literally, the only one. You can go and get this speech yourself. May 21st, 2020, U.S. Economic Outlook and Monetary Policy, delivered by Richard H. Clarida. In that speech, he has this to say. March 17th, the Federal Reserve Board had announced the establishment of no fewer than 9 new facilities to support the flow of credit to households and businesses. These programs are authorized under the emergency lending powers granted to the Fed under Section 13.3 of the Federal Reserve Act and are available only in, quote, get this, unusual and exigent circumstances. Nobody knew that these would exist unless we have unusual and exigent circumstances. That's it. Right now, they couldn't deploy it unless they come up with unusual and exigent circumstances. All right. Circumstances with the consent of the Secretary of Treasury. I think you will agree that today we face circumstances that are both unusual or both exigent and unusual. These facilities are supported with money invested by the Department of Treasury, drawing on appropriations of more than $450 billion authorized by Congress in the CARES Act for the specific purpose of investing in Fed programs to sustain the flow of credit to households, firms, and communities during the corona pandemic. Boom, the establishment of the gold machine. We have this gold machine that can produce as much gold at will without very little cost or energy. We have this machine to deliver as much corporate money or much money to the corporate debt as much as they need, right? Same machine. It's the same machine. We got this machine that can produce as much gold. Here we got this machine that's going to buy as much corporate debt. It's the same concept. Now this information gets delivered out there to the people, and what is it that the people do? Well, in the gold machine scenario, they dump their gold because this dude's going to be able to produce as much as they want. In the corporate debt lending facility machine, the people saw that the Federal Reserve was going to be buying into it, and they started front-running the Federal Reserve, thinking, man, if the Federal Reserve has $450 billion that they're going to go out there and buy a bunch of corporate debt with, wouldn't it be smart to buy the corporate debt ahead of them so that you could sell it to them for a profit? Right? I mean, that's essentially what ended up happening. With these facilities, we are providing a bridge by stepping in, and this is back to the speech, stepping in and supporting lending throughout the economy until the recovery takes hold. These programs, here we go, this is the key to it. These programs are designed to offer a backstop source of funding to the private sector, and just the announcement of these backstop facilities would soon be launched appears to have bolstered confidence in the capital markets, allowing many companies to finance themselves privately even before the facilities were up and running, before they produced a single ounce of gold. Same thing. It's the same thing. If you think about the gold machine and how this hypothetical gold machine would adjust the prices within the markets, this exact same thing. The credible threat, scientifically verified, proven. These corporations were able to find the funding themselves before the facilities were even up and running. I don't know, like, nobody else is going to show you this information like this. This is unique to the Uneducated Economist YouTube channel. We are the only ones who deliver this. I will not forget it, and I will not let it go. So many people will just think, oh man, no way, there's so many more things important. What about the firing of Lisa Cook and Jerome Powell? And I'm like, that is not important, and here in a few months, nobody will be talking about it. Right? Everybody says, oh man, it's the most important thing right now. It shows all the horridness that's going on within the Federal Reserve. It's very important. We got to investigate. We got to do something about this. This is super important. Gone. Right? Whispers. Who's like, anybody still want to fire Jerome Powell? Where's those headlines, man? Where did that go? Well, nobody wants to discuss that anymore, like it was important because it didn't matter anyway. Right? All right. Few more here, guys. You guys having fun? We got 489 people watching with 114 likes. If you guys are having fun, hit the like button. Go and hit that thumbs up. By hitting that thumbs up, we're going to get more people to join in on this live stream. They're going to understand what's happening. We're going to be able to figure out what it is that we need to do for ourselves, because we can see through the BS. We can see through the mainstream media narrative and their use of the hypothetical gold machine. We don't fall for it. We know that they're doing it. We see it on a regular basis. We call it out when we see it. Okay? People want to take into consideration so much idea of what's important because of what it is that's been delivered to them through the mainstream media narrative, only to find out that that power pendulum no longer exists, and it expended all their energy. It took it all from them. They were left with nothing. Right? They were left with no expectation of anything of benefit from all the extreme effort and thought that they put into their power pendulum. Gotta fire Lisa. Gotta fire Jerome Powell. Where's those people now? Right? Where's the rally? Gone. Right? Used it all up. Now they don't need you anymore. You're wasted. You're away, wasted away. All right. Turning to one of my absolute favorite speeches, right? Not the favorite speech, but up there with them. This is coming from Philip Jefferson. This is February 21st of 2025, so it really wasn't even that long ago, right? I mean, we're talking just a few months ago in the grand scheme of things, within the last year. And I love bringing this up because this is so important, right? This is really like critical to knowing that it doesn't really matter what the interest rate is, it's the message that they deliver with it. Listen to this. Using textual analysis and high-frequency asset price data. Sorry, guys. Let me give you the title. This was February 21st, 2025. Reading Between the Lines, Textual Analysis of Central Bank Communications, Philip Jefferson, right? I want to make sure you guys have all the speeches. Like, I want to give you the titles to them so you can go look them up for yourself. But it says this: using textual analysis, high-frequency asset price data, and high-frequency central bank communication data, this research shows that investors' reactions to specific sentences communicated by the central bank are quickly incorporated into asset prices. All right? Super important. Specific sentences communicated by the central bank are quickly incorporated into asset prices. The delivery of the information of the gold machine. That's how they do it. If they said, hey, man, we got a guy who knows how to make a gold out of nothing, right, with very little cost or energy, the specific words and sentences they use would have a reaction within the markets, the plummeting of gold, especially if it was widely publicized and scientifically verified. Policymakers know that their communications are likely to affect the course of short-term interest rates, other asset prices, and the associated economic outlook, resulting in an easing or tightening of financial conditions. It doesn't matter what the action is, it matters what the delivery of the message was. That will have an easing or tightening of financial conditions. Very important. It's very important to understand. All right? Because once you see that, once you recognize it, then you start to see, man, oh, they're really concerned. All these people, the labor market's really concerned. They're not going to know what to do, man. The Fed's feeling the pressure of the labor market. And I'm thinking, nice delivery of the message, yo. Like, same thing with the Lisa Cook and the Powell thing and all the other stuff. Great delivery of the message. You're wrong, right? That's not important. What's important is following the Fed's understanding and following the Fed in their communication about what it is that they want for the Fed funds rate in relation to the neutral interest rate. That is the most important part, because that's what they're actually doing. They're not falling for Trump's demands. They're not, bowing down to all this other stuff out there. They're trying to get the Fed funds rate to neutral. If neutral comes up or if the Fed funds rate comes down, one of the two is what they're hoping for. Elevated inflation expectations due to the credible threat of tariffs raises the neutral interest rate. It's totally a benefit to the Federal Reserve. Like, again, this is the only place you're going to find this information. Nobody else talks like this. And this is stuff that, like, literally the Fed has communicated. This isn't me making this up. I mean, this is the Fed saying this. I'm just found it, interpret it, bring it up here so that you can, guys who are regular, average, everyday people who don't necessarily go through all these Fed speeches to find this stuff, I'm delivering you the message. Huh? This is how you know that they're using their words. Again, going with Philip Jefferson's speech, this was given May 13th of 2024. So again, right, it's a little over a year and a few months old, 5, whatever it is, year and a half old. Communicating about monetary policy. Literally, the speech is that. Communicating about monetary policy. Not monetary policy adjustments to interest rates, communication about it. Some of these that I have highlighted here to talk about are so telling. When you look at this and you recognize it today to how it is that they conduct themselves, it really starts to clear a lot up. Just the simple fact that, like, I keep saying this over and over again because I was kind of aggravated about it. I'm like, where's all this, like, firing Lisa Cook and Jerome Powell? Where's all that? Where are all the people who are on that bandwagon who made it super important? Where do they go? All right, how come they're not out there in droves right now trying to beat down the doors of the Federal Reserve to get these two people out there? Right? Anyway, it's because it wasn't that important. Here we go. In 1981, Karl Brunner, the Swiss monetary economist, called central banking an esoteric art and lamented central banks' quote, inherent impossibility to articulate its insight in explicit and intelligible words and sentences. Basically, this Swiss monetary economist said that there is no way in the world that a central bank can communicate about what it is that's happening with monetary policy. It's impossible, right? Inherent impossibility to articulate its insights in explicit and intelligible words and sentences. Can't do it. At the time, central banking wisdom dictated that monetary policy makers should say as little as possible. Some research of that vintage tried to rationalize this, quote, secrecy through the notion that monetary policy would be particularly effective if it surprised markets. We're going to hit some thunder here in just a second. It would particularly effective if it surprised the markets. And I think that right there, most people don't realize that the Federal Reserve used to conduct themselves in a way that would be like interest rate adjustments would happen one day when you didn't even realize it was coming. You would just wake up one day and boom, interest rates had adjusted. They were like, whoa, what's going on? Why did the Federal Reserve adjust rates, right? They surprised the markets. This is how they used to conduct themselves. And they thought that was how it would be more effective. It goes on. Expectations became the focal point in academic and policy circles with the emergence of the new Keynesian model. In the 1990s, as a framework for monetary policy, in these models, aligning the expectations of decision makers in the private sector with those of the policymakers produced superior outcomes. Think about that. They aligned the decision makers of the private sector. That's you and me. We're the decision makers. The corporations and the hiring of the people, they're the decision makers. Aligning the expectations of the decision makers in the private sector with those of the policymakers produce superior outcomes. Mike Woodford, one of the developers of the new Keynesian model, put it this way. Not only do expectations about policy matter, but very little else matters. Your expectations matter, and very little else matters. That's the monetary policy, not the adjustment of interest rates. Your expectations, you're the gold machine. Right? The delivery of information into you and your reactions to it is the gold machine. During the tenure of Chairman Bernanke, there was another burst of innovations in the way that monetary policy was communicated. This is the understanding of it. Ben Bernanke knew that they had to deliver the message. In order for everybody to know that there was a gold machine, they had to figure out how to deliver that message. Because most people don't listen to the Fed. They don't even care. They don't even know who the Fed is. Like, most people are not going to wake up and go like, man, what did the Fed say today? Right? They care less. And they're like, they wouldn't know what a Fed gold machine was anyway because they have no idea what the hell the Fed is. So they had to figure out ways to develop the communication style. Right? In 2007, the first SEP was published to convey systematically the economic outlook of the FOMC participants. That's the Statement on Economic Projections, famously known as the dot plot, right? 2011, Chairman Bernanke started holding press conferences after every other FOMC meeting. In 2012, the Fed adopted an explicit inflation target of 2%, which I think is just hilarious because they never achieved it after that. Hey, we're trying to get to 2%. Just saying, 2%'s our goal. We're trying to get to 2%. Anybody believe that we can actually do it? Anyone? All right. In 2012, the Fed adopted an explicit inflation target of 2% and started publishing individual FOMC participants' views on the appropriate future path of Fed funds rate, now famously known as the dot plot. During these years, Loretta, in her capacity as the research director at the Fed Bank of Philadelphia, contributed to the ongoing work on communications in collaboration with the policymakers and the Federal Reserve Board staff. They continued to figure out how it was that they were going to communicate. It's really coming down, isn't it? See, of course, this was an extraordinary time for monetary policy, as its interest rates in most advanced economies were close to zero following the global financial crisis. See, that was the problem that they were facing, that Ben Bernanke was talking about earlier, that we were discussing in the deflation and how to prevent it from occurring here, right? That was the problem that they faced. They were close to the zero bound following the great financial crisis. The FOMC employed forward guidance. They deployed the gold machine. Explicit communications about the future path of policy rates. They're not talking about interest rate adjustments because that doesn't work anymore. They had to use something else called forward guidance. Explicit communications about the future path of policy rates as a key tool to deal with the unprecedented situation. The key tool. Like, you think about it, like you have two tools. Which one do you use? Well, I use both of them. Well, which one do you use more often? Well, that one is the one we use more often. That must be the key tool. Communications became the key tool. This isn't me saying it, it's them, right? The research community had found that such forward guidance could be very effective in the context of the new Keynesian paradigm. Well, no kidding. You think? You know, keeping rates extra low, extra long for an extended period of time, do you not think that that would have an impact on the economy if you were to promise them to deliver that sort of information through all channels? Of course it would, right? Because that's the monetary policy now. When Loretta became president of the Federal Reserve Bank of Cleveland in 2014, she supported the continued use of forward guidance during these extraordinary times, in particular to communicate a lower for longer policy that could provide accommodations. By communicating a lower for longer policy that could provide accommodations in the presence of the effective lower bound constraint. If you're down at the lower bound of zero and you can't stimulate the economy, just promise that you're going to be there for a significant amount of time going into the future, because that communication, in particular, a lower for longer one, has the ability to provide accommodations in the presence of the effective lower bound. That's what she says. In particular, to communicate a lower for longer policy that could provide accommodations in the presence of the effective lower bound constraint. They didn't say nothing about interest rates. They talk about interest rates being stuck at the lower bound, but that's okay. They can use words. They'll promise to keep it extra low, extra long for an extended period of time. That'll cause accommodations. That will provide accommodations. She also insisted that forward guidance could be used effectively even in normal times as a means of clarifying the FOMC's reaction function. Do you see that? Forward guidance can be used effectively even in normal times. Why wouldn't they use it? They can get more power out of their words and their actions anyway. Right? I mean, isn't that what Homeboy said earlier? That expectations matter and nothing else matters? Loretta, as a member of the FOMC Subcommittee on Communications, developed and advocated for several proposals to improve communications. One proposal was to publish a measure of uncertainty surrounding the SEP forecast numbers. She was concerned that uncertainty could be underestimated Uncertainty could be underestimated by the public if it wasn't communicated. Like, they get more power out of the uncertainty. If they can create uncertainty within the market, their words have more power. Right? You don't believe, like, Phil Jackson actually addressed this. Hold on. Where is it? Later on in the speech, he says this: surely, sometimes central bank communications have unintended consequences. Let me give you two examples. First, there is always the risk that policymakers' statements about the economic outlook or their expected future path of policy rate are interpreted by the public with a false sense of certainty. How many people got it promised in their head that there is going to be an interest rate cut coming? Essentially, it's promised. That's signaling given by all the members out there believing that they should cut. They haven't voted on it yet. There is no like autopilot program going where they're going to adjust rates regardless of the FOMC meetings or anything. There's nothing like that. They vote on this. It could be a 25 basis point cut, could be 50 basis point cut, could be no basis point cut. There is no signaling, or there is no commitment, but there is definite signaling. People have committed themselves to an interest rate cut. They know what's going to happen. Right? This is the false sense of certainty. For example, the data-dependent forward guidance announcement. Data-dependent forward guidance announcement. Data-dependent. Got to wait and see. Got to see where we're at. What's inflation? What's unemployment? Got to see if this labor market continues to weaken, blah, 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 right? Forward guidance, data dependence. All right. Can be mistaken for a commitment to a fixed path of interest rates. Again, they're always data dependent. They always leave it open-ended because they're using their words, not the actions, their words. By using their words, they get more out of the market. People interpret it with a false sense of certainty. That, again, is part of this policy, how it works. All right. When that interpretation is proven wrong down the road, it can create more volatility and uncertainty than if there had been no announcement. All right. See, if they didn't say anything, nobody would have been listening. There wouldn't have been any action. They literally create the uncertainty within it. That is why policymakers always make sure to stress that the data dependence of the future policy decisions. Always. They always leave it open-ended. Everybody who commits themselves to the signaling is not taken into consideration that they leave it open-ended, always data dependent. He says it right here. That's why they stress it, right? That they are always data dependent on future policy decisions. Second, it is possible that the public misinterprets the views of individual policymakers as a committee view. Right? They hear one policymaker say something like, "Oh man, Michelle Bowman says they're going to have to cut rates. They're committed." And it's like Michelle Bowman's one of 12 voting members. There's 11 other people who are going to vote on policy. All right? Misinterprets it as a committee view. The potential for misinterpretation is especially acute when many policymakers speak at the same time and disagree with each other. If you are trying to create uncertainty, then you have many policymakers come out at the same time and disagree with each other. Think about it. Myron right now, this newest member to the FOMC, is trying to say that the neutral interest rate has fallen, when most of the rest of the FOMC is saying that it's rising. They are disagreeing with each other. They literally come out and disagree with each other on purpose. Many of them do it. It's part of the policy. It's part of the plan. The potential for misinterpretation is especially acute, right? When many policymakers speak at the same time and disagree with each other. The diversity of viewpoints among policymakers lends itself to stimulating debate. I mean, how many times do you hear about it out there on the mainstream media? Oh, this Fed is saying that. One Fed is saying that. No. On and on. Don't know. Everybody's kind of, what's this? Right? They have no idea. It comes up for this major stimulating debate, creates all this massive uncertainty that they used against the people. If they can create the uncertainty, keep the open-endedness, people are hung on every word that they say. The diversity of viewpoints among policymakers lends itself to stimulating debate and ultimately better policy. But in such a situation, more communication could increase rather than reduce uncertainty about our policy. They do it on purpose. It creates better policy, stimulating debate. All right, 207 likes with 443 people watching. Thank you for joining in on today's live stream. We're 55 minutes into this. All right. This guy is just regurgitating. Regurgitating what? My own vomit? I mean, I'm certainly not regurgitating anything that's coming from the mainstream media, because this isn't anything that you get from the mainstream media ever, right? And if I'm rehashing the same things over and over again, it's because this is by far the most accurate way of understanding the monetary policy coming from the Federal Reserve, and it cannot change if this is the most accurate. If it wasn't accurate, you could go to accuracy and you could change. But if you don't change and you're still accurate after years, that's it. There's nothing else. If I have to regurgitate it over and over again for people to internalize it so they can make the best decisions for themselves, awesome, right? Because there's no other information to take in if it's inaccurate. This is by far the most accurate information when it comes to the monetary policy. All right. I saw Catherine Osfitz explain the plan during an interview. Yeah, what plan is that? To raise the neutral interest rate by using elevated inflation expectations in order to make the economy far less restricted than anybody had ever given it consideration for, while the Federal Reserve essentially sits on their hands? Is that how she explained it? Because if she didn't explain it like that, that's what's happening. So, yeah, just saying. Uneducated, can you talk about the government shutdown and the food stamps not being paid over the next month? I mean, other than the painful experience that you're probably going to get if you're addicted to the food stamp deployment, right? Like if anytime you rely on government, you are essentially asking or putting yourself in a compromised position. The government cannot always be there. They promise, we would like to believe it, but it's proof within itself that the SNAP, something as simple as a food delivery mechanism, fails, right? And what it fails is people are now pulling their hair out trying to figure out what the hell they're going to do. If they never had relied on it to begin with, it wouldn't concern them. In fact, what will end up happening is if they had not positioned themselves to take advantage of the government subsidy, what will end up happening is that the deployment of food cards that doesn't take place prevents the people from going out there and buying the food. What would happen to the food prices? All right. What happens if you have less demand for food? Because the people simply just can't afford it. I mean, I understand the painful experience that people are like, oh no, like, oh man, the poor people, the kids and all that other stuff. I totally feel for it. Like I've, tried to do my best to participate in providing some sort of relief and help for people who are homeless, serving lunches, talking with those people. It's a hard case, very difficult road to be on. And when you put your reliance on the government and saying, oh man, I can eat so long as I get this card in, then you are setting yourself up to essentially be punished when the moment that government isn't there. All right? That's the way I feel about it. I've never taken advantage of, I guess that's not true. During COVID, they essentially they gave out. We didn't even play. They just gave them away, right? So there was a brief moment in which that we did have those food cards and we did use them, but it wasn't something that we had asked for, right? And I thought that was really weird that they were just kind of handed out there like that. All money, again, when I think the inflationary pressure that came when you enter all this stimulus money into all channels at the same time, and it starts creating all this stimulating effect through purchasing supply-demand imbalances when they were actually looking for inflationary scenarios. It makes me wonder, it was just like, well, here's an easy way to get money flowing out there through all channels. Just literally give it to people who don't even really need it. All right. So when I think about how it is that people position themselves in life, when you rely on things like the government for anything out there at all, you are setting yourself up. You're setting yourself up for punishment. Now, it may very well be that they fulfill their promise, but it's a very good chance they won't. Right? And if you're not prepared to deal with that, then you're not prepared at all. At all. Like none. You're not prepared. If you are not prepared to deal with the fact that government is not going to provide you with a food stamp card, your SNAP or whatever it is, even like all the way down to the infants and kids and mothers and all that, if you are not prepared to deal with it, then you were not prepared at all. At all. None. So it's a sign. If this is a punishment to you, if you are feeling the pain from this shutdown, take it as a warning sign that you are not prepared. If you are saying, man, this is an irritating experience, but I'll get through it, you're probably prepared, right? Whether you planned it or not. If you can look at this and say, man, this is irritating, but I'll get through it. I'll figure it out. I mean, I got other things going on. I mean, it kind of sucks or whatever, but that's the attitude you have, as opposed to how am I going to do it? How am I going to figure this out? What am I going to do? If that's if that's the anxiety level that you're carrying, you are not prepared. That's all there is to it. All right. You can't really vote for somebody who is not there, and the reason why they are not there is because it is a money game. I don't know who you're going to vote for that's going to make any difference in your life. I mean, the only person who can make any difference in your life is you, right? There's nobody out there who's going to do anything any different. I mean, I saw how irritated people were when Biden was in office, and I see how irritated people are with Trump in office, and I'm thinking to myself, this is never going to be a world in which that is not irritated. That is an irritated world. They are irritated. That's it. There's no doubt about it. And if you want to immerse yourself in an irritated world of such nature, go for it. I personally have taken control over my experience by taking control over my own economy, by looking at the government as something that is external to me. Right? I have my own decisions to make. Are they there? Yeah. Do I participate? Have to, right? If I want to participate in some of these other things going on, am I relying on them? Not a bit, right? Do I expect Social Security at some point in the future? Yeah, if the government's still there, sure, give me my Social Security check. Is the only thing that I'm depending on? Absolutely not. Is it going to be there when I get there? I don't know, maybe. If it is, cool. If not, then really count on it anyway. Right? It's just a government thing. Let's see here. I don't want to live like street Trump. Okay. Irritated by the own stupidities, not Trump. The own stupidity. All right. Let's see here. Anymore. You're clueless. The economy was pretty good under Biden. Okay. And if you don't see what Trump is doing to the economy, then you're beyond clueless. Well, thank you so much for joining in on today's live stream. I just ran through about an hour's worth of detailed explanation of how the monetary policy is working. The fact that people had anticipated and believed and knew for a fact that there was elevated inflation expectations that were coming through the monetary policy, and Biden administration, Bidenomics was creating all the inflation that came down with it, literally destroyed the ability for the working class individual to ever have a possibility of actually making it with their day job. That was really solidified and sealed the deal on the working class individual. during the Biden administration. I hope people realize that, right? Like there was no, like, after that, there was literally no option for the working class individual to ever use their day job to make it ever again. Thank you, Biden administration. Now, it wasn't his administration that did it. It just happened to be along the timeline of what it is that's going on with monetary policy. So, if you want to thank Biden for producing this wonderful economy that everybody just did wonderful with, you can also thank him for creating the inequality that now we all have to suffer from and now have to work extra hard, extra long for an extended period of time beyond that of our day jobs, hustling, being disciplined, putting that money towards something that is going to have a return, starting businesses, educating ourselves, doing the best we possibly can with no other option because of that situation. So go ahead and give it to Biden. You know, man, great job, bro. Great job. You know, 2 thumbs up. Get out of here. Okay. If you had a car dealership and every time a politician sneezes, cars or house assets are in jeopardy. So politics does play a role in economics. Well, I guess if you want to live your life like that, it does. But you're absolutely incorrect about that. Politics are reacting to economics. They always have. The fact that you were industrious is the reason why politics are reacting the way they are. You had to be an industrious person first. When you were industrious, people came in and began to govern that. They took control over it and they said, oh, hey, all you industrious people, we need some governance now, don't we? They came in and they started to govern the people, but the industrious people had to be industrious first. Think about it. You can't have a bunch of rich politicians come in and say, hey, all you lazy people, go produce stuff, would you? Like all you people sitting on the ground, go do something. It doesn't work like that. The rise of an industrious people gives room for politics. It gives rooms for people. Here, this is the easiest way you can equate it down. Like, take it back to like the most primitive form of primitive form of economics that you can come up with, right? And now you really think about it when it comes to here in the United States before the settlement of the European nation, before the Europeans. Here you had these Native Americans who were essentially living off the land, right? And there was only so much land available for the existence of a certain amount of population of people. What ended up happening was incredible bloody battles over hunting grounds, right? Because there's only so much food and we all can't live here. That is the most primitive form of economics, if you can think about it, right? Now, there's all kinds of things that we can do, right? Let's get together. Let's talk about this. Let's be political about it. We can share. We can govern. We can farm and agriculture. We can do all these things. We can do all this for abundance of food, and we can all be here. And the moment that you do, and you raise the population, you have separation. Some people are more important than other people. Right? And onward it goes. So when you look at the understanding of economic forces that are taking place, politics doesn't create those economic forces. Politics reacts to them. In fact, I think it's best to understand it from even Cantillon's point of view, because he even brings it up. Let me bring it up here. Hold on, because Cantillon addresses it. He says, when confronted by extraneous factors such as politics, Cantillon insisted that such considerations be put aside, so as not to complicate our subject. Politics reacts to economics. Nobody wants to believe that, but that's the case. You have to be industrious first before somebody can try to govern that. If you weren't industrious, nobody would be there. There would be no political environment. Everybody just sitting on the ground out there, not doing anything, not creating, not producing, not being skillful with their understandings and their labor and their crafts. If you weren't doing anything, there wouldn't be anybody to govern that. Right? The moment that you start to be good at what you do, somebody comes in and says, "Oh, hey, you're pretty good at what you do." so is that guy. We should do something about that. Yeah. Be put aside as not to, he said, thus invoking a kind of ceteris paribus assumption before it became fashionable in economics to do so. Right? Very first, that's like in the very first paragraph of Cantillon's essays, he says, let's not talk about politics, okay? Let's get down to the underlying economic forces that are really playing out here. So go ahead. Actually, go for it. Go ahead and involve everything that you are doing with your decision-making process. Go ahead and involve the political environment into it, and then you will be subject to those politicians. When those politicians make a decision, it impacts you. Bang. Right? See, it's funny. I step away from it. I don't feel impacted by the decision. People are like, "Oh man, this is what's happening. This is what they're doing to you. This is how it's gonna. This is how it's gonna hurt. This is how it's gonna be all painful. This is all this experience. Blah 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 blah." And I think to myself, "Well, that's what you're gonna get. I'm not gonna get that. I've been doing this for a long time. Those politicians don't seem to affect me. Whether it's Obama or Biden or Bush or Trump, it doesn't matter who is in office. It really doesn't matter to me. I have my own decisions to make based on the experiences that I have and the goals that I want to achieve and the understanding from where it is that I'm at. I know for a fact that politics didn't have anything to do with the fact that the domestic manufacturers left this nation. You know how I know? It's because Cantillon described it 250 plus years ago. How it is that manufacturers will leave the state when the people have moved into a luxurious experience because of the raising of the standard of living. I mean, he explains it. We've gone over it time and time again on this channel. Right? So go ahead and fall into politics, fall into those power pendulums. You know what? Go out there and invest time and effort and energy into the idea of firing Jerome Powell and Lisa Cook. And don't think about what it is that you need to do with your money. Think about how it is that you need to fire Lisa and Jerome Powell. Think about how much of a pain in the ass they are to be at the Federal Reserve. Think about how it is that they could possibly make some sort of change to what it is that's going on out there that you all of a sudden are going to be able to do something with your money. It will make zero difference. Zero. All that time, effort, and energy trying to figure out whether or not you should fire Jerome Powell or Lisa Cook will make zero difference. There is a monetary policy strategy that is being conducted by the Federal Reserve on a much bigger scale than Jerome Powell or Lisa Cook. It will make zero difference in your life. It will make zero difference to monetary policy. It makes zero difference, but it makes one hell of a great discussion. Right? Because it's very political. Being political. Doesn't have anything to do with politics. What happens when robot and AI take all the jobs in companies that buy the equipment, have no customers because there's no cash flow? Of course there'll be cash flow. They're going to inject UBI. They're going to just give us the money, produce a consumer, right? They have to. They have no other choice. They're going to have to produce a consumer. If they don't produce a consumer, then we're not going to import the stuff. If we don't import the stuff, the whole system will collapse. They have to produce a consumer, and our jobs aren't going to be enough. I don't care what your wage increase is going to be. You're not going to be able to increase your wages enough to increase the consumption enough that's actually going to create the numbers that the Federal Reserve is looking for. That's for the top 20% of people to do. They're the ones doing all the consumption. So you can go out there and have a job and work real hard at your job and try to build up a career. It's not going to work going into the future. Think about it. There used to be living wage jobs that were just average jobs. They don't work anymore, right? That's not gonna change. It's going to get worse. We have to be able to be producers, savers within the nation. That producing, saving nation went out a long time ago. We are a debtor. I mean, you have to producing, saving. We are now a debtor consumer nation. There is no way to switch back over to being a producing, saving nation that would build a strong economy and a strong middle class. It doesn't exist like that anymore. Yeah. And you can blame politics. Go ahead, figure it out. Politics didn't create it, so therefore politics can't fix it. Yeah. How much do you need to make per year to be top 20%? Well, I think it would really depend on where you're at to be considered part of the top 20%, but I mean, ultimately, honestly, I thought it was around that $100,000 mark, but apparently it's a little higher than that. Right. But again, if you make $100,000 in San Francisco, it's not going to be nearly as much as if you're making $100,000 in Missouri. Right. Like you make $100,000 in some little town in Arkansas, you're probably going to do quite well comparatively to somebody making 100 grand in San Francisco. All right. We could be producers and savers if we actually did. We can't. GX slap, we cannot. You know why? It's because you want to, maybe not you, but we here in America want a luxurious experience. And if we have a luxurious experience, what we are going to do is we are going to consume. And if we consume, we're going to raise the standard of living. And if we raise the standard of living, we will not be able to compete against other people out there who are producing and saving. So there's no way we can do it. There is no better feeling than to raise your standard of living, and there's no more of a painful one than to lower your standard of living. Lowering the standard of living is the only way that we can become producers and savers in this nation again. There is no other direction that we can go. All right? There's nothing the politicians can do unless you want a boot on the face of humanity, right? Purposefully preventing people from moving into luxurious experiences, right? Something like that. Hyperinflation coming. I doubt it. Surgery, Sergey, I very seriously doubt there's going to be hyperinflation coming. Not to the United States, not to the U.S. dollar. All right? Not anytime soon. And the reason is because of the world dollar denominated debt. And I know a lot of people get very confused when they, like, let me see if I have it here, just to bring it up. This is probably one of the greatest documents you can go and read. November 1st of all this stuff comes out in November. It's weird. November 1st of 2022. Dollar funding stresses in China. Now, once you read it, it's a long document. It's like 20 something pages, but really it's only the first 5 or 6 pages that really has the information in it. Everything else is just kind of talking technical stuff. But when you go read through this document, you are going to realize that there is more dollar-denominated debt that exists outside of this nation that is going to create the problem for the dollar strengthening, not weakening. Right? How is it that the Federal Reserve is even going to be able to provide the world with it? See, that was something I was meant to bring up when I was talking about Ben Bernanke. Trying to buy the asset. That was the whole point of this whole video. I totally forgot to bring it up. The balance sheet reduction, right? When that ends, people think it's going to be quantitative easing. That is not the same thing. Quantitative tightening and quantitative easing are two separate things altogether, right? Balance sheet, like stagnation, is also separate. It means they're not buying or selling anything. They're just rolling over what they have into new debt, but not expanding or tightening the balance sheet at all. Right? When it comes time to expanding the balance sheet again, the Federal Reserve is in a bind. What in the world could they possibly do in order to provide the world with the liquidity? See, here's the problem. The need for U.S. dollar funding during the financial stresses in the mid-March of 2020 as COVID pandemic news shocked the markets was evident in a number of countries. The dollar-denominated debt was creating a demand for dollars. When that dollar stopped flowing, that debt was coming due, and they could not find the dollars to pay it. This was a major problem. Notably, however, China's dollar liquidity needs received little attention. Nobody knows. Nobody talks about it. Everybody talks about, oh man, everybody's dumping the dollar, getting out of the dollar, abandoning the dollar. But very few people talk about the absolute the demand for dollars that became incredibly evident during COVID when the flow of dollars slowed. Okay? Given China's significant economic and financial linkages to the United States and the rest of the world, financial instability there could have implications for the globe. Talking about the dollar-denominated debt there. Hence, it's useful to develop a deeper understanding of the dollar liquidity needs of Chinese banks and non-financial corporations, and to probe whether existing avenues of dollar funding for banks and other firms in China are sufficient in times of stress. This is our objective. See, they're not concerned about dollars coming back. They're concerned about getting dollars to them. This is 2022. It isn't that old. All right? Evidence of dollar funding stresses in March of 2022. Dollar funding stresses abroad are instantly observable through the cross-currency basis, the CCB, between the dollar and foreign currencies. For a given currency, the basis is the difference between the interest rate for borrowing dollars directly and the interest rate for borrowing dollars synthetically by combining a foreign currency borrowing with foreign exchanges, the FX derivatives. If funding markets are efficient, arbitrage between these two alternative methods of borrowing dollars keeps the basis near zero. When access to dollar funding is stressed, however, the magnitude of cross-currency basis relative to the dollar can become significantly negative because of the balance sheet constraints of potential arbitrage banks. They just don't have enough. Understanding that, like fixing that problem, then I'll worry about a hyperinflation after that. But until this problem is solved, I am not even like this much concerned about a hyperinflation, like literally that much concern. Okay. How much concern do I have over dollar funding stresses outside of this nation that all of a sudden causes the dollar liquidity crisis? That is magnitude. That is something that actually keeps me up at night trying to think about. Hyperinflation? None. No concern about that. None. All right. I think the wealth gap is a bubble. Hello, Simon. Good to hear you. Well, thank you very much. I appreciate you being here. Elena, thank you so much. Inflation is coming and you don't even know. Okay. Unleash Matt. You are actually benefiting the Federal Reserve with that. I don't know if you realize it, but the hyperinflation scenario or just the elevated inflation expectation is actually creating the power that the Federal Reserve was looking for in order to save their monetary policy. So I have to give it to you, man. Congratulations. You are definitely on the Fed side. Let me just flip my head around so that you're definitely understanding that I want the end the Fed scenario. Of course, you can't read it because it's backwards because YouTube screws it all up. But to understand that the hyperinflation or just the elevated inflation expectation was absolutely what the Federal Reserve was needing to save their monetary policy. Now, going back to Bernanke and what it is that he's going to buy, so just so I can just finish that off so I make sure I get that information out here. To know that Bernanke knows that the balance sheet expansion has to continue and that the use of U.S. Treasury debt to do it would eventually cause the Federal Reserve or cause the money printing and balance sheet expansion to put the United States on an unsustainable debt path. This is what he had to say. The Fed can inject money into the economy in still other ways. See, it's more about injecting money into it, it's about they're more concerned about deflation. They want people to feel inflation. They want the elevated inflation. They need that to save their monetary policy. Deflation is the thing that they're concerned about. Right? The Fed can inject money into the economy in still other ways. For example, the Fed has the authority to buy foreign government debt. They have the authority. They don't need to look through the authority. They don't need to ask Trump or anybody else. They have the authority to buy foreign government debt as well as domestic government debt. See, they buy domestic government debt. Everybody knows that. And if they were to go into quantitative easing, everybody is focused in believing that they would be buying more U.S. Treasury debt. They don't have to. They have the authority to buy the foreign government debt. All right? Potentially, this class of asset offers a huge scope for the Fed operations, as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of the U.S. government debt. That is what I believe we're headed towards. And I think that the fast tracking of cryptocurrency, well, the central bank digital currencies and tokenization that has taken place is to essentially accommodate this. Okay? I love how people say, man, you don't know nothing about it. And I'm like, man, I'm digging stuff out from 20 years ago, relating it to what is occurring now today. You think about it. How many people have told you that the Federal Reserve already has the authority to buy foreign government debt? The problem with this is how do you control this situation? Well, if you have tokenization, central bank digital currencies, track, trace, control, man, this is a wet dream for the central banks. Like, this is lining up exquisitely. Sorry, but I probably don't really know, you know? I mean, I've only shared like 20 different documents with you today explaining everything that's happening in a way that nobody else does. But, you know, I guess everybody else, you know, they know it. Thank you for hitting that like button, everybody. We got 276 of you who have hit the like. We got 459 people watching. Continue to hit that like button. Yeah, but the young generation is screwed. How can they afford a house or buy anything that we could? They can't, Wick. That's the point. Wick, you're absolutely right. They can't. There's not the frustration of what it is that people are feeling, why it is that they could do it before, but their kids won't be able to do it. I get it, man. I am facing the same things. My kids will not be able to go down the same path, go and get a job working at the lumber yard, find a nice young lady to marry who works at the pizza parlor, and figure out what it is that they need to do and make it through this world, because I could barely do it. They certainly won't be able to do it. There's nobody planning on doing it going into the future. To say, like, there's nobody planning on making that possible for these people to go into the future. There's no reason to think that it can happen. I'm sorry, Wick. This is the truth of it. Nothing that can be done to fix that situation. They won't be able to afford a house. Not with the standard day job, not with their career that they are planning on going to, because 80% of jobs in the future are going to be paycheck to paycheck. They have to figure out another way. But there is other ways. That's the whole point. There's house hacking available. You team up with other people. You can figure out side hustles, businesses to start. There's things that you can do, but thinking that a day job is going to be enough is absolutely incorrect. It will not work. That was a time long ago when we were producing Saving Nation. We are a debtor consumer nation. Day jobs will not do that anymore. Day jobs do not produce enough to even be a consumer anymore. Like, there was a time when the Federal Reserve would try to get more employment to create a consumer. But now people can work as much as they want. They don't add to the consumption. We've moved beyond it. That's sad. I get it. There's nothing they can do to fix it. Don't think that there is. I mean, think that there is. But you're going to be wasting time thinking that there is, trying to figure out how to fix that, than there is trying to figure out what you need to do in order to survive in that sort of environment. Because there is things you can do. But thinking about how to fix it isn't one of them, because there's no fixing it. How is it that you are going to conduct yourself going into the future? That is something you can do. You know, that is something that is legit. All right. All right. I have a guy with a name only Bitcoin. All right, let's see here. Let's get all-nighter. Entry-level buyers need not buy a medium-priced house. That's what entry-level is for. And unless wages are paid on leverage the way houses are bought, the two don't compare at all. Absolutely, all-nighter. See, the thing is like when you start studying it enough and you see it enough, then you can start recognizing what it is that doesn't work. And as many people say, oh man, but this is the way it should. You're absolutely right. It should work that way. It don't, right? I mean, it should work that way. It doesn't. Because it will outdo Bitcoin in price appreciation and will make you lots of money. XRP doesn't do it for me. BTC only. I'm with All Nighter. There's nothing else out there that is. There's nothing out there that is doing that can do anything different than what BTC is doing. Without us, I mean, even with the secondary layer system, there is literally nothing out there that these other coins are doing that BTC can't. Right? And so everything is secondary. And I get it that XRP may become a functional tool that is used within the banking system. There's all kinds of stuff out there that'll do it. And if you have your belief into the XRP, go for it. I don't. Right? I don't see anything within a single Federal Reserve document anywhere that talks about the use of XRP. And when I made that, out of all the stuff that I've ever researched, I have yet to see it. Now, maybe I'm still missing it because every single document that anybody has ever sent to me that came from the Federal Reserve that mentioned XRP was somebody else's suggestion to the Fed. They referred to it as an existing thing, but never once incorporating it into the monetary policy or any kind of anything. Okay. Tokenization of the dollar, stable coins, that is huge, right? That's all over the talk. And just recently, there were some speeches that are given, so I want to read those here real soon too. I need to really get back into the members only. Gunner, thank you so much for the $4.99, man. I really appreciate you, bud. Very supportive of the channel. Let's see, Walrus. I thought Ether was far more usable than BTC, but I find this crypto stuff all very BSY to me. Swift will be using Link, not XRP. Micron stock went up 280% and in 6 months. I wish I would have bought some. How do you at me? Congratulations on and another 10% tax for lumber. Well, yeah, but Northwest Coast, that's not really any different than what has been happening since the early 80s. So I'm not sure where it is you're getting at on that because that's not new. Right? I mean, Trump administration, Biden administration, Trump administration again. Nothing new. Yeah. Same thing. Same thing with Planetary. Should have bought. I'm not saying you can't make money trading. Yeah, you can make money trading. I humbly recommend everyone please research any cryptocurrencies they are wanting to buy prior to doing so. Well, absolutely only Bitcoin. I mean, that should be the case with anything and that you put your money towards. Like there should, I don't know how many people blindly put money towards stuff, but I guess it's a lot of people. Right. I mean, it must happen a lot because so many times I hear, oh, I should have done the research or you should have done the research or something of that nature. And I'm thinking to myself, man, how is it that you were able to even get the confidence to buy it in the first place? Unless it was like, a bet, like you were gambling. That's not investing. Gambling and investing, hoping and wishing and dreaming and praying that something is going to go in the direction you're please work out, like I don't know if that's necessarily like investing, to me. Like, to me when I like even when I bought into Nail, when I bought that 3 times leveraged ETF, I mean, I'm watching this thing fall, and then it gets down to a really low price and I'm looking at it, I'm like, oh man, I'm out here in the environment, doesn't seem like it's good. I don't know, man. I think this is a good decision. I'm going to jump in on this thing, right? And just from the things that I'm experiencing, what I'm looking at, how I feel about the conditions, and thinking, man, this thing is not going to be going down. These bills are in a position in which that they have like a lot of inventory. There's a possibility they could be making money. They lay off a bunch of people. Who knows what could happen with their stock? It could go up, and certainly it did. And that was the reason why I got into it, is because I'm part of the lumber game, right? I could see the home builders. So moving into that position was not something that I was taking a chance in. I had a lot of confidence in it. Now, a lot of people call me crazy because it was a 3-time leveraged ETF that nobody ever buys and holds, but the uneducated economist, because, I was never told not to. Yeah. And although I could have done much better off of it, I did quite well. Yeah. So, don't gamble, all right? Donald Trump holds a ton of BTC. Life is a gamble. You need medication, dude. All right, good luck with that, man. You go out there and you gamble your life, okay? I mean, this is what I find interesting about it, is that there was a time in my life where I was falling into the abyss, man. Like, I was not doing well. Everything, like circling the drain, right? And I figured out the things in my life that I needed to do to go the opposite direction in that, to actually be able to put myself in a position in which that, one, the best part, pay my bills on time, get a house, be able to build up a stock portfolio, a retirement fund. These are the things that I didn't have 10 years ago, but yet here I have it today, and people tell me all the time, dude, you don't know what you're talking about. And I'm thinking, okay, go listen to somebody who has already made their millions during a time in which that you do not have available to you. I'm doing it right here, right now. All right. So I don't know. Go listen to somebody else. All right. Go listen to somebody else who's already done it during a time in which that you don't have capabilities or access to. Back in the day, when they loaded up on their real estate, they're telling you all about how you can be a real estate, investor too. Even though they did it a long time ago, during a time that doesn't exist today. Or you can talk to somebody who is starting to figure it out, what they had done wrong, what they are attempting to do right, sharing that with the audience out there, so hopefully they can internalize some of the information, relate to some of the things that I have talked about, look at what it is that they have going on in their own life, and then move forward with operations. Man, make it happen. It's like, I don't know. I mean, do you want to, like, there's plenty of people out there who have done it, but there's very few people out there who are doing it, right? Start from scratch right now and figure it out. How many people actually do that? I mean, that's the coolest part about the Uneducated Economist here, is that that's literally how it started out. Day one, November of 2017, I'm sitting in an old Oldsmobile Aurora with a used iPhone 6 making an introductory video because one of my coworkers was telling me I need to start a YouTube channel. That's literally what started the channel off. All right? I mean, I had absolutely nothing, deep broken debt, broken down cars, nothing. Like literally no expectations of any kind of thing going on in my life that I would have any kind of benefit from. And I started thinking, man, I need to change my ways, need to start changing the way that I'm doing things, changing the way that I look at stuff. I was a huge conspiracy theorist. That was my major problem that I had faced, is I was a huge conspiracy theorist, and I thought for sure the New World Order was coming after me, and I was proving it to myself. Deep, dark depression, deep in debt, deep, horrible state of being, and I knew for sure it was all because of the New World Order. Global governance was doing it to me. All right? When I let go of all that stuff and I said, man, it ain't their fault, it's my fault. Like when I literally said that, it ain't nobody else's fault but my own. I'm looking in the mirror, like looking at it and saying, dude, everything in your life is your fault. Everything. You can't blame anybody else for anything that's out there. If you're planning on fixing this, you have to take ownership of it now. So that's what I did. I was like, okay, it's all my fault. I get it. What is it that I need to do? Well, just make the next right decision. Sometimes the next right decision, don't drink. Sometimes, show up for work. Show up for work on time. All right? Maybe that's the only right decisions that you can think of. Don't drink and show up for work. I assure you the next one will show up. There will be another right decision to be made soon. Hey, Simon, do you think you could do another video on your grocery receipts? Yeah, actually, Deplorable, that was a really good one. I should have done it today. We went to Costco, but we just didn't do that big of a shopping trip. So I didn't think it would make that great of a video. But the next time we do, we will absolutely do one of those for you. People really enjoyed that. Like, my wife is an incredibly good shopper. Like, people complain all the time. I even heard it the other day. I was like, oh, I came out of the grocery store. I had 2 bags of food. It cost me $150 and stuff. And I'm thinking for $150, my wife will walk out with a basket full of groceries. Like a whole shopping cart full of them. She does it regularly, you know? And a lot of people are like, how does she do it? She plays the shopping game, like grocery shopping, to its finest. She is to its finest. I'll just show it to you guys sometime. Like, I can't even explain it. Like, I don't even know how she does it. All right. Keep your credit clean if things look like Weimar is imminent. Debt max into BTC. Weimar is not coming. Weimar was not a world reserve currency. It's not the same as what the United States is doing. We have massive we have massive debt issuance taken across the world that has nothing to do with the United States, that is due in dollars. That's like the dollar funding stresses of China. If you read that document, the hyperinflation scenario idea is like, it kind of goes out the window. You don't even consider it anymore. Not yet. It'll take more. All right, do a video next year as well. What are you talking about there? Oh, crap, I was supposed to go to Costco. All right, nobody is coming to save you. People stop watching. People stop waiting. You guys don't have time. You're right. Nobody is coming. I agree. Generation Xers learned how to live cheap. They really did, didn't they? I mean, I'm Generation Xer to the core. And yeah, I mean, I guess, there was something that we had differently than I think a lot of others, is that we had that like transition from like not really having technology to having the technology, like having access to the internet and all the social medias and stuff like that. Like my kids, they joke around with me like, Dad, tell me again about how the phones used to be attached to walls, and like they joke around like that. But it's like there's a lot of seriousness to that. There was a lot of differences in growing up when you have not only like playing out in the yard with sticks to having like access to the internet. Generations now don't understand the idea of like, creative outside playing. Like, I think somebody had mentioned it one time and it made a lot of sense. Like when I was a kid, the opportunity to see a movie was like one time, right? Later on, VCRs and, the ability to watch a recorded video came out. Like, when I was a young teenager, everybody was starting to have these, have VCRs and stuff. So we could watch more movies. But before that, you really only had one shot to watch a movie, right? You went to the movie theater and you watched it. And then you had to relive the movie in your head. And so as kids, we would be playing out in the yard, reinventing the Star Wars movie or something, and playing Star Wars out in the yard. That's how we relived it. Not by watching it over and over again, but by literally internalizing the movie and then thinking about the movie again as we were out there enjoying ourselves in our life. That's a huge difference in the way that people want to enjoy the movie again. They just go and watch the movie and then they watch a few minutes of it, feel satisfied with it, and then move on to the next thing. And then get their dopamine hit. It's just, this dopamine addicted society, who needs a new fix every couple of minutes from constant TikTok videos and stuff like that, has really like changed the way that people behave and act and feel. Like when I was a kid, that was a very common thing. Go to the movie and then you relive the movie in your head and played games and, had fun doing that. Now it's not even the same thing. Like going out to the movies is a much different experience, and then what you get from it isn't even like that same great memory or whatever. All right, Gary, thank you so much for the $10. Keep being a everyman kind of guy. The traders are the future for our youth. We need people to educate our future. Well, thank you very much, and I will. I'll be out here regularly sharing this information, sharing my thoughts and ideas, sharing what it is that I find through the Fed's documents and the speeches and the research that I do, because I absolutely love this. I love it, guys. Like, I absolutely love doing it. I could spend all day doing this stuff, you know? Jay, thank you very much for the $5. Thanks for all the lumber info. I've been killing it for the past few years in the lumber futures because of you. You're awesome. Well, thank you, Jay. I really appreciate it. And I hope you're just using the information along with all the other information you're doing. You must be, right? Because just this, my information alone is not enough. Really, it takes that in conjunction with all the rest of the stuff that everybody is learning and understanding. But I do have accurate lumber information. I'm not making this stuff up. Most people have to get their lumber information from, the internet. They go off there and they do research that way. I most of my lumber information comes from boots on the ground, firsthand perspective, and then I use the internet to confirm what it is that I have been finding out there. And now most of the time I find that internet articles are very inaccurate to everything, not only the lumber information, but then also to the monetary policy. It's one of the two reasons why I just stick to those two, is because, I don't, people talk about copper, talk about silver, and I'm like, I'm not a copper miner. I don't know any copper miners. I don't know anybody in the copper mining business. I just don't know copper mining enough to then give you any information outside of the propagandized information that is being delivered over the internet. All right. But if you want to talk monetary policy, I think I have a deep understanding of that, the deep understanding of the strategy coming from the Federal Reserve starting 20 plus years ago with Ben Bernanke, delivering all these speeches, doing it consistently, regularly. I don't think there's anybody who can match that. I really don't. I am willing to debate anybody out there when it comes to monetary policy. I don't care who they are. I literally do not care who they are. I think my information is second to none. And literally, it's only because I'm not interpreting this information and coming up with some idea of what it is based on some other economist out there who has their misinterpreted idea of what's going on. I'm getting this information directly from the Fed itself. I don't know how it could be misinterpreted when I'm reading their words. Like, it isn't foreign, right? It isn't foreign language. This is their words. Now, granted, the Fed speak can be very confusing, but once you decipher how it is that they are using those words to be confusing on purpose, it starts making a lot more sense. Their jargon, their lingo is regular English words, right? They're words from the English dictionary. It's not like they're like, maybe quantitative easing was a made up word at one point, but but ultimately, we know the definitions of the words, how they use them. That's the important thing, right? Because just because you can understand the words they use, the way they use them is very unique. Yeah. What time is it here? Alrighty, guys. I got like just 6 minutes left on my phone. Did I bring? Oh, I guess I got my. Never mind. I got my battery out here. All right. Give me 1 second here, guys. Let me plug it in. Whoops, stay upright. Okay. Ta-da. Oh, dang it. This is how high production YouTube channels are made, just like this. All right. Yeah, I don't think the people at the top want a fair playing field. It's not a matter if they want it or not. There's none that he had. There's no there's no fair playing field to be had. There's no point in thinking that there is one, right? It's not whether they wanted it or not, there isn't one to be had, right? You can even say, well, if they wanted a fair playing field, there could be one. Well, then you're literally telling people to not be humans, right? You're telling people, don't enjoy luxury, take all your hard work, don't increase your standard of living, don't move that into anything that is going to be anything other than more production and savings, and do that for generations upon generations upon generations, because that's what it took to get here. That's what it's going to take to get back. And there's nobody who's going to go through that experience. Like literally the moment that somebody has the ability to buy a new car, they will. You can't tell people not to do that because human nature does that. Right? There's no fair playing field to be had. The only fair playing field is the one that you make for yourself. Right? Yes, it'll demonetize gold slowly over time. I watched a robot deliver supplies to a patient room while cleaning the floor at the same time. Machines are working 24/7. The future isn't waiting for you, it is replacing you. Yeah, but that's okay. Because, see, the thing is like, what do you want to do there anyway? Like, do you really want to clean or do you want to do something else? Like, I mean, maybe you really enjoy cleaning and you enjoy your job and the people that you work with and everything that you're doing. But ultimately, I mean, much like what a lot of what I do, loading up lumber or something like that, it's a mundane job. There's no real reward for that. I feel rewarded for doing this. Like, I feel discussing, studying, sharing economic stuff, whatever you want to say. This is like a passion of mine. I love it. I love doing it. Right? And now, granted, I could probably do it for a living, but then I would be forced to do it. Getting to do it is the best. Right? Having my day job that pays the bills and getting to do this is like the best experience that I could ever ask for. My job will eventually go away. It'll eventually go away. I know it is. I mean, I can already see it happening, right? I mean, the fact that I ordered most stuff through portals, like I'm a salesman, right? I mean, I do sales for a living. People come in and they're like, I want a window. Okay, let me order you a window, right? But now everything is run through portals. So here it is, I'm working on a computer and I'm entering all the information into a computer program that's going to eventually go over to the manufacturer and produce the window that I want for the customer. Well, what's the difference between the customer putting the information in and me putting the information in? Nothing, right? Like, there's literally no difference except that I am a middleman getting paid to tap the keyboard. That doesn't make any sense. I mean, how much longer can this go on before they eventually eliminate me? All right? I mean, and it's happening for like most, like, I order like metal roofing that way. I order much of the hardware that way. I order windows and doors that way. I order decking that way. There's so many things. And every day it seems like there's another portal being developed that I can enter information into in order to acquire the products that I'm selling to the customer. I'm eventually going to get to a point where I don't need to be there anymore. I don't need to be the one pushing the buttons. The customer can do it themselves. They can say, this is what I need, and then it shows up. Right? Why am I there? I'm just like, I really don't serve a purpose anymore. Now, granted, there is always a need for salesmen to explain the options and, stuff like that. And people want that sort of experience. When it comes to like, figuring out what it is that they actually need, there is a salesman that, would be needed for that. But again, online, communications and Zoom and all that other stuff, it really kind of eliminates the need to have somebody waiting for somebody to show up to have that discussion with. I'm on my way. Like, my job is on its way out, I can tell. How much further into the future is it? I don't know. Am I going to be able to find something else within the industry that would still require my time to be there? I probably could. I can do a lot of different things, and it doesn't matter if I'm at that lumber yard doing sales or doing something somewhere else. I'll figure out what it is that I need to do, and I'm not that scared. Like, opening up the opportunity for me to go off and pursue my passion and having the ability to make a living doing that doesn't require an extraordinary amount of effort or commitment to anything sounds pleasant. Like, I'm looking forward to that. And if somebody says, oh man, they're taking your job away, and I'm thinking, that job? Cool. Are you going to take this job away? Because delivering information and being somewhat or attempting to be somewhat entertaining while doing it, being useful and helpful, I don't know if necessarily you can take that away from me. All right? I mean, there's already all kinds of places that you can go to get the information, but can you get the information delivered to you in a way that is relatable from a working class position that gives you the ability to have a conversation and talk about it and from your own point of view? Like, I mean, sure, there's probably places out there you can do it, but this is very unique, and I don't think it's necessarily something that is just easily developed through AI. All right? This kind of communication is human communication. It's very different. I mean, do you want to sit there and, like, I mean, does a dude want to sit there and chat with some girl chatbot thinking, oh man, you're so hot and you're so beautiful, or do you want to chat with an actual human? Right? I mean, it's like, telling a robot they're beautiful doesn't, like, yeah. Wow, look at all these comments. My goodness. All right. We're live, baby. Okay, do you think the Fed is late in the terms of the rate cutting cycle? No. Because again, I don't believe in the rate cutting as the monetary policy. I don't believe rate cuts, the rate adjustments are the key policy tool. Their spoken words are. That's the key policy tool. They're not too late. They delivered information plenty of times well ahead of the market, or well ahead of the adjustment of interest rates that the market internalized. They used it. They used that market perception to their advantage. No, they are not late to the game. They're not even remotely close to being screwed up. They're like, the idea that Jeffrey Gundlach was saying that they're bumping around like Mr. Magoo was probably one of the most comical things that I've ever heard. And it really just shared the light on him about how little he knew about monetary policy. Because if he's delivering that to the mainstream media, I cannot trust a single thing that dude says from this point on. I can't. I won't. The bond king that the whole world just seems to follow and look at and all that other stuff. That's what he said about the Federal Reserve. They're bumping around like Mr. Magoo. I thought, man, you have no clue about monetary policy. I do not trust a single word you say from this point on. And I don't. I don't trust anybody, any of those people out there on the mainstream. Like, they do not get it. I will debate any one of them. I will debate anybody when it comes to monetary policy and what it is that the Federal Reserve is doing. Because I have gone over this information so many times now that I don't really even need the speeches anymore. Right? I try to use the speeches so I can get the dates right and make sure I get the quotes right. But the information that I got out of them, that stuff doesn't change, and I got that internalized. Yeah. Simon, what's up with the bond vigilantes? Thank you for your response, Uneducated. You bet. What's up with the bond vigilantes? I don't know. Like, I don't think the world is necessarily operating in the fashion in which that people would have, like, when they see something happening out there, they had internalized it in a former way. Let me see if I can explain this here. When the Federal Reserve deploys words and you see those words get a reaction out of the market, and then you see market pricing moving, especially when it comes to the bond market. Now, I have to wonder, is it really them acting upon their free will? Or are they interpreting the information, which means that they are being manipulated? Has the Federal Reserve gotten so good at manipulating the bond market through the deployment of words that they don't even realize the manipulation is taking place? You know? Like, it's hard to answer the question because I just don't think that the operation within the economy is conducted in a way that a lot of people would have remembered or learned in a classroom about the Federal Reserve, like, Fed Operations 101 or something like that. I think it's completely different. Things like, you have to understand, Like, why did things like the Somme rule break down? I mean, here, Claudia Somme, who I think is great. Mike Zuber did a great interview with Claudia Somme, and she had to admit that the Somme rule, which was an indicator of a recession when unemployment rises, I forget the exact term from it, I could probably look it up here, but is when unemployment rises over a specific amount of time. This rule worked every single time to predict a recession, except for this time. All right. And I said it so many times before. We're going into a recessionless recession where we will experience recession like things without actually having a recession. All right. And a lot of people were like, that doesn't make any sense. Either you go into a recession or you don't. And I'm thinking, well, what if a recession, which normally has unemployment rising and the bailing out of the corporations, what if those two things don't happen? What if the tight labor market does begin to raise unemployment, but it doesn't raise it significantly? And what if the failing corporations don't get bailed out? Right? This is what we are experiencing now. And a lot of people are like, oh man, here it comes. They're about ready to do it. There's going to be bailouts and all this other stuff. And I'm thinking, nah, it doesn't go down the way that it used to. Not like it did. Like, I'm not saying there isn't going to be a bailout, but it's not going to bail out in the fashion like people had remembered, where, like, literally the government goes out there and buys, like, the bonds out of GM Corporation or something like that, where they're actually bailing out the auto industry or something of that nature. I don't think it's going to go down in the same fashion. Like, we saw a bailout of the corporations take place during COVID, but the Fed didn't even really do anything. They set up a special purpose vehicle, and then the market was able to fund the corporations themselves, just based on the expectation that the Fed was going to do it. Right? We learned that earlier today. These are the type of behaviors that are now happening within the economy. And so when you look at, like, what's happening with these bonds, and what's happening with this bond market, and I'm thinking, I don't know, because it isn't the way that it used to operate. And I'm almost thinking that this is a manipulation tactic that has been deployed upon them through the propagandized information of the mainstream media. I mean, the wait and see to be proven right on it, but who knows, All right. I love it. My favorite part is when somebody says, dude, if you really think that there's no inflation, you are an idiot. And I'm thinking to myself, man, you have no idea on how much that sort of mindset benefits the Federal Reserve. So, like, most people don't even realize that the Fed was desperate for that inflation. Let me see if I can bring it up here. Hold on. See, when you go back and you listen to John Williams' speech, Monetary Policy for a Low Neutral Interest Rate World, that one statement, ironically, the problem we need to solve these days is a risk of inflation that is persistently too low rather than too high. This is the same problem that Ben Bernanke was describing 16 years earlier. The problem with an inflation being persistently too low rather than too high. So when I hear people say, oh, dude, you have no clue what the Federal Reserve is doing, what the economy is doing, this inflation is going to destroy everybody. It's going to be causing hyperinflation, destroying the monetary policy, dollar debasement. They have all these concerns about it. And I'm thinking, you're falling in line with what John Williams needs you to believe. Inflation that is persistently too high rather than too low. Perfect. Good job. I mean, that's what John Williams wanted you, and he's like wanted you to believe, and he's New York Fed president, standing member on the FOMC. Like, patting you on the back. Great job, guys. Keep that elevated inflation expectations going. Totally saving our monetary policy. Good job, guys. All right. All night or good night, only Bitcoin. Make sure to subscribe and come back. Yeah, thank you so much, Bitcoin, only Bitcoin. I really appreciate you being here and all the comments that you left. All right, deplorable. Yes, Jimmy, inflation expectations do create inflation. Okay, if interest rates lower, does that mean your cash is worth less or more? Um, if interest rates lower, does that mean your cash is worth more or less? I think the question needs more context to it. Right? How come here? Let me ask you something. If money printer go burr, prices go up, how come it is quantitative easing one, two, three, and four, which took the Fed's balance sheet of $850 billion to over $4.5 trillion, failed to produce the inflationary scenario that John Williams was so desperately looking for in 2018, just a few years later? I mean, quantitative easing fired up what it started in around 2008 or something like that. And here it is 10 years later, after quadrupling the balance sheet. And John Williams is like, we got inflation that is persistently too low rather than too high. So I don't know. Like, I mean, people ask me questions like that, and then I have to answer back with another question, right? People say, well, if lowering of interest rates, does that cause money? Does that cause the prices? Does that cause inflation? And I'm thinking, well, apparently not, right? Because quantitative easing one, two, three, and four and zero interest rate policy failed to produce the inflationary scenario that the Fed was looking for. So it's an easy statement to say it, but it's not easily explained that money printer go burr, prices go up. I mean, you could say it easily, right? And then say you're an idiot if you think anything else, and then have no clue, have no ability, have no understanding, and have no conversation about what happened with quantitative easing one, two, three, and four failing producing an inflationary scenario for the Fed. You will have to go like, I don't know, right? Because you just don't know. Or you could say they lie, right? That's another easy one. They lied. Yeah. Oh, okay. But the Fed here explained in detail what it is that was happening with their monetary policy operating at the lower bound of zero, failing to produce an inflationary scenario that they were desperate to find. They needed elevated inflation expectations in order to raise that neutral interest rate and to pull the Fed funds rate up off the lower bound of zero. I'm the only one who is discussing that in detail from the very beginning. I have never changed my tune on that. You can go and watch videos that I did years ago saying that exact same thing. James, thank you so much for the generous super chat of $20, man. Thank you so much. All right. Yes, lowering interest rates does cause inflation. Deplorable, you're inaccurate. That's inaccurate. You deplorable will not be able to answer the question on why it is that quantitative easing one, two, three, and four failed to produce the inflationary scenario that John Williams was so desperately looking for in 2018. He can't explain it. So he's going to say, yes, lowering interest rates creates inflation, but then has no ability to actually discuss what happened over the previous 10 years. None. Zero. Right? I mean, I've shared it with him many times, but he refuses to internalize that information and instead just wants to blame the Federal Reserve for causing inflation with the money printer, and that is exactly what the Federal Reserve needs you to believe. Lowering interest rates does not create the inflationary scenario. Lowering interest rates is going to create a situation in which that corporations were going to hire people, and that hiring of people increased the aggregate demand through the consumption. That doesn't take place anymore. They proved that. Obama administration the lowest unemployment in history, or historically low unemployment, from the end of the Obama administration all the way through the Trump administration, failed to produce an inflationary scenario with ultra low interest rates. It didn't work. There's no sense in believing that it does. If you do, you'll miss it. much like many people are missing it right now. They don't think about the Federal Reserve deploying words in order to stimulate the economy. They think about interest rate adjustments. All right? It's because that's what they've been trained to believe. I just discussed for over an hour how it is that they don't use their interest rate adjustments and how it is that they use their words in order to conduct monetary policy, creating a stimulating or a restricting effect based on the words that they had deployed, and people still look at interest rate adjustments creating the problem. Okay. Go for it, man. Go and internalize that information. Go follow the politics of it. Go figure out what it is that you need to do, because that is delusional thinking and it doesn't work. All right. I answer the question. It's above the comment you read out loud. All right, deplorable. See, the thing is, like, deplorable pushes back against me a lot. We're kind of buds. We're cool, but he pushes against everything. So he's like devil advocate on everything. All right. I will care about interest rates when I am retired and want free money on my money. Free money. I like that one. Lowering interest rates, access more liquidity for more people so they borrow more money, which causes inflation to go up. Yeah, but that would be true if we were actually in a situation in which that people could borrow more money, right? The money that they borrow, they're debt saturated, so they don't borrow enough money to actually do anything within the economy. They can't. Like, there's literally nothing that they can do in order to borrow enough to actually stimulate the economy. They're done. They're out of the game. All the consuming is now being done at the top 20%. So whether or not you lower interest rates or raise interest rates, it doesn't change the way that the bottom half of, or even the bottom 80% of people are consuming. That doesn't change anything about the way they behave. They're stuck. There's no out of that. There's no anything. Okay? So the lowering of interest rates doesn't get them to borrow money. They're debt saturated. Lowering interest rates doesn't get them more wages. The wages don't increase enough to actually change their life. The lowering of interest rates doesn't benefit them. It used to. There was a time, I had absolutely agree with you, deplorable. There was a time in which that the lowering of interest rates would definitely stimulate the bottom half of people in the way, or the bottom half of people, would stimulate the bottom 50% of wage earners, right? The lower wage earners would get increase in their wages. That increase in their wages would then get them out there spending, increasing the aggregate demand and causing the supply-demand imbalances. You would find the inflation. That used to occur with the lowering of interest rates. I would absolutely agree with you on that, but that doesn't occur anymore. It's been proven over the last few years. The lowering of interest rates, here it is, monetary policy strategies for a low neutral interest rate world is proving that to be the case. The lowering of interest rates does not work. End of story, right? Used to work, doesn't work, right? Two different things. What does work? Demand coming from the top 20% of wage earners, top 20% of household incomes. How do you get them to spend? Get them to have a bigger return on their capital investments, because when their assets go up, their wealth effect goes up, they go out there and spend that money. You can't get the working class to increase their consumption like you used to, but you certainly can get the top 20% to do it. Because if you just look out there right now, just look at some of the stats. 10% of household incomes do 50% of the consumption. Okay, there is nothing left for anybody at the bottom end. There's nothing there. Yes, I understand that. 10 years does not correlate exactly with the mortgage. That's why I mentioned mortgages. All right. Let's move on. You have a point. The wealth is concentrated at the very top. It really is. D.O. Brown. And it's not like it just concentrated up there by... The concentration of wealth takes place anytime you ever have new money coming into the system. If you have ever increasing amounts of new money, then you're going to have ever increasing amounts of concentration of the wealth. You're going to have ever increasing amounts of separation between the rich and the poor. The money has to go somewhere, right? And it goes to the top. If you don't have it, somebody does. Right? And if the average everyday person out there isn't buying assets, then their assets can't go up, right? They can't grow. So here it is, you have money as an individual person, and you're just trying to figure out how it is that you make your monthly payments, and there's nothing left outside of that. How is it that you're going to accumulate the assets? You're not, right? You're just trying to live paycheck to paycheck. So there's people out there who do have the ability, who have cut back on their expenses, who have acquired the assets, and as those assets increase, they get to then raise their standard of living, which is essentially the inequality happening. They move into a luxurious experience. And that's the occurrence, right? All right. Stop buying crap, have discipline, and do more for yourself. Yeah, I mean, that's essentially what it really comes down to. All right. Do you think when the stock market starts crashing is when they end the government shutdown? I don't know. I never really thought about that being the case. Like when the stock market starts crashing, they ended like, I don't know. Like people want to correlate those two things together. And it was just like, well, I know this. When Trump was in office, we didn't have inflation. When Biden was in office, we had all kinds of inflation. It's Biden's fault. I'm like, well, wait a minute here. There was a broken down supply chain that started off, didn't have anything to do with these. Never mind. You know what? Yeah, Biden's fault. You're right. Whatever. I don't know. I don't correlate. A lot of things I just don't correlate these two together. Like, I mean, the government shut down in the stock market. The stock market crashed. Oh no, we better open up government. I don't know. I guess some people might believe that. I don't know. I don't. All right. There is not relation between the stock market and opening the government. Yeah, that's what I'm saying. I can't really put these two together. All right. Stock market, not the economy. You're right. Unsavable. All-nighter. It's not the inflation makes people poor. Inflation is inanimate. People, through a lack of ambition, allow themselves to fall way behind the flow of inflation, become poor, in my opinion. Well, and that's really what it comes down to, is that people just, I think because they don't really truly understand or recognize what's happening within the system, they kind of think of things being like, I guess, a steady, like, this is the way it's always going to be going into the future, and never learn to adapt to the current situation. I know growing up that I looked out there and thought, man, there is all kinds of jobs that are available that would be ones that I could do, that I could actually use in my life. I look back at those jobs and they would be so difficult now to do it with, right? And even like, I just think about like the average day jobs now that used to cut it, just don't seem to cut it anymore. This unfortunate circumstance is not going to change, but it's okay. It's not okay in the sense that, man, I wish it was like, different. I mean, that part's not okay. I mean, I don't want to have to work that much harder, but whatever. It's okay in the sense that there is something that we can do about it. Like most people are like, oh man, if a day job just can't do it, that's it. We're all going to have to wither and die. And there's people who will probably end up suffering the consequences of it, not realizing that they have to do something else or be incredibly disciplined at what it is that they are doing. But when you recognize it and you see it and you know what it is that's happening out there, well, then you don't feel scared or worried or expecting like, an outcome that may not necessarily be one that is even feasible anymore. like having a day job be enough, or a living wage, or something of that nature. That part doesn't exist. The ability to live does. All right, so you have the job that doesn't pay a living wage, but then you can go out there and earn extra money. You do extra side hustles. You figure out what it is that you need to do in order to become an investor. And this is the sort of discipline that people have that actually make it. And then people say, oh, they're greedy. And I'm thinking, no, they're not. This is the same people that Cantillon had described. There is going to be a segment of the population who postpones buying into luxurious experiences. They will not increase their standard of living. They will hold back on those expenditures. They will save so that they can secure a decent rate of interest beyond that of their occupation, and then they become property owners. That's it. The more the people do it, the more they had an opportunity to do it, the more they took advantage of the situation to do it, the less available there is today to do the same way. You can't do it like that. There was a time when you could do it. You could have a factory job and get a house and raise the family and kid and have the retirement and do all the stuff, and you could do it with that factory job. It's not going to occur that way now. All right. I was told to buy land young. Absolutely. It's weird, twisted way that we are lucky that we are their cattle, because the others, they just blow up. Oh, that's kind of true, I guess, in a sense. It's kind of a weird way of looking at it. All right. Shake my head. Some people's lives such so bad they better off in jail. Yeah, it's kind of sad to think about it, but yeah, I can see where there's people who are probably needing to be institutionalized. Like they can't make it out there in society, and so if you just at least had them in a building that had a bed and food and some sort of like medical care for them, I mean, then it's better than being high on the streets, I guess. I don't know. Like, I don't know what to do with the people who are dropped out of society. Like, I see it out there regularly. Once you're homeless, like I can't imagine being on the streets for, a few years, living in that survival mode, that you're going to be able to figure out a way that you are going to show up every day for work, clean, ready to, face the day, the struggles, the stresses, the issues that come from having, to be responsible and committed, and, all the stuff that comes with needing to be in a day job. Like they just feel it's not on the cards. Right? You need to be raised into that in a way that gives you the opportunity. Families help, and support. I'm gonna call it quits, guys. How late are we into this? 2 hours and 20 minutes? My goodness. How late is it? 6:30. Oh, wrong glasses. I got two glasses here, and those are the wrong ones. There we go. Much better. All right. Don't worry, it's not true unless you think about it. All right. Art supplies. Being on the hamster wheel isn't living either. Yeah, but who's that? SV Thora Sailing. Yeah, being on the hamster wheel, it certainly isn't, right? Running the rat race, so to speak. But, when you're on the hamster wheel, it's actually like, a lot of people think of the W-2 as being on the hamster wheel. And for me, like, I think about having the day job as just enough to cover my living expenses. And it's actually pretty cool because my day job also has insurance, for the time being anyway, for me and the whole family. That's a pretty cool experience. Maybe at some point there might be some Social Security insurance that, payments that come out at some point. These are the things that are kind of beneficial from having a day job. But it's not enough. And it's never been enough. And the only time that I've ever found in my life that I was actually able to do things that are that of like progressing was when I did extra, worked the extra side hustles, worked an extra job, did extra. So money beyond the money that you're already making, that's almost the key to it, because the job itself is it may or may not be enough. Right? That's the hamster wheel. But there's other places that you can go to. You don't have to be on the hamster wheel. Some people just get on the hamster wheel and say, hey, I ran the hamster wheel and it's not enough. And you're absolutely right. So you can get on there and spin all day long and it'll never be enough. Or you can go out there and try and find other things. You know, I mean, doing online sales, doing side hustles, starting a business, figuring out a way that you can make $1 on the internet, and then you can figure out how to make 2, and then 4, and then 8, and then onward. You got to build it up over time. It doesn't happen in a single minute. It doesn't happen in a single day. It may not even happen in a year. I did videos for years on this channel before it became anything of like money, like profit or anything like that. Literally every video was another brick by brick by brick, building up the audience, building up the, the video content. It was really the support of the viewers themselves. And when I say I didn't have it monetized, that wasn't necessarily true. The viewers themselves were supporting the channel. They, PayPal tips and, just all the support that they were just doing. I mean, really, it was the encouragement of keep going that really did it for me. I mean, they were enjoying the channel so much. I loved reading through the comments. I loved building up this community, and I didn't really think about the money. The money just all of a sudden just kind of happened, I mean, yeah, I did think about the money. Like, I became a partner. I clicked on the AdSense revenue things, and I did all the stuff to make the channel monetize, but I didn't really think, man, I'm going to use this to get out of debt, and I'm going to use this to buy a house, and I'm going to use this to go on fancy vacations and buy cars and all that other stuff. I didn't have any of that thought in my mind. None of that, The only thing I thought of was, let's make another good video. Oh, my phone is rattling here. Just hold it in place while I scroll. All right. Simon, I appreciate my daily life so much after really accepting what your channel has taught me. It really is about how you want to view the world. It really is, Aaron. Thank you so much, Aaron G, for that comment. And I am so glad that that's how you internalize that message, because that's really the way it needs to go down, is you need to figure out this stuff for yourself so that you can view the world in a better way. Because it's really, nothing. The reality of the world is the meaning that you have given it. Plain and simple. If you are looking at the world as a hateful place, then you are going to see a hateful existence. But if you see a world of opportunity, a world of abundance, a world of positivity, a world of capability, right? When you see this out there, all you see is that. Right? In fact, you see it so much that you actually start to feel irresponsible for not pursuing it because you see so much of it out there. Right? As people are saying, man, there's no option, there's no way, they can't do it, it's all screwed up, and you can't do, like, I'm looking at it going, man, I feel irresponsible for not actually pursuing more stuff. Right? More stuff that I see that I could be doing. And so when I think about it in this fashion, I think, man, the world is nothing but abundance. It's abundance of stuff, abundance of opportunity, abundance of money, abundance of everything. There is nothing out there that is lacking except for your own perception of it. And as most people will say, like, oh no, let me prove you wrong, and then they'll start to discuss the reasons why I'm wrong, it's literally their own ego trying to be safe and secure within what it is that they see. Their ego, right? Once you change the way that you feel and believe about the world, the way that you feel about what it is that you have going on in your world, how it is that you can pursue the next right thing and pursue opportunities, viewing the opportunities out there, knowing that you have a chance. Like, I mean, here's the thing. There are people out there who are doing it right now. They are out there killing it right now. The energy of being able to do it exists. You have to be in the energy like those people are doing it. Those people aren't thinking, oh man, the world is screwed up, I can't do it. They're not thinking that. Not a single one of them who is killing it right now is thinking the world is screwed up, I can't do it. Every one of them is thinking, man, the world is full of opportunities and I'm going to kill it. And that's what they're doing because they believe it and see it. Yeah. I constantly try and promote your channel to people. Knowledge is power. Well, thank you, Aaron. I really appreciate it. Hitting that thumbs up button has been one of the best ways that you could support the channel. We got 403 people who have hit that like button and 310 people who are watching. I love it when I see more likes than I have people watching. If you haven't hit that like button, be sure and go over and hit that thumbs up. By hitting that thumbs up, the YouTube algorithm will grab this video and share it with more people. And then when you share the video yourself, when you like share it on your social media, share it with your friends, when you share the video, YouTube recognizes that as well, and then when you share it, they want to share it, and this is how you promote the Uneducated Economist in the best way, right? Simply by commenting, being active within it, by hitting that thumbs up button and sharing the video. These are the best ways that you can support the Uneducated Economist, and it doesn't really cost you anything, okay? So thank you for doing that. All right, and the Fed coin. Yeah. I'll make the coin and go to jail. Nobody needs to go to jail. We can just end the Fed, just, we can, I mean, the thing is like, by ending the Fed, like, we could literally do that on our own. We can go on our own gold standard. We can go on our own Bitcoin standard. However, most people are so scared to unload all the Federal Reserve notes out of their bank account and out of their pockets that they will never do it. They literally are scared to end the Fed. I mean, here, I got a hat on. It says end the Fed. I don't know if you can see it, right? But people are just too scared. They're not going to do it, right? And so I'm cool with it. Let's end the Fed, man. I mean, I'm willing to, participate in what it would be like to be on a gold standard inside of a nation that doesn't produce anything and imports everything that they have for a luxurious experience from the rest of the world. I can see what kind of pain and misery that would create, but I think I would actually do quite well in that environment. So I'm down for it. I'm down for anything. I don't care. Throw it at me, right? Throw it at me. I do not care what it is. I have like at least thought about it in a way that says I know what I'm planning on doing. Now, whether or not I'm successful at that, that's a whole other story. Like, I mean, time will tell. But at least I have given it some sort of consideration. That's what I'm thinking. Government collapse, or if the New World Order continues on. Either way, I'm good. I'm gonna pursue what it is that I need in my life, and I don't care which direction we end up going. Like, I kind of care, but there's nothing I can do to change the situation, so I don't care about trying to change it. What I do care is about understanding what it is that I need to do in order to make the best decisions for myself and my family. That's what I do care about. Did I get another super chat? Am I missing a super chat? Man, you guys are so awesome for supporting the uneducated. Okay, the wealth building journey. Thank you so much for that $5. Having a positive mindset is like accruing interest income. It compounds continuously over time, and then it snowballs like crazy into an avalanche. That is so true, man. Like, you cannot tell the truth. Where's that down bottle? There we go. Sorry, I'm crushing this bottle down here. But that is so true. The positive mindset is a very compounding effect. So is the negative, right? The negative is also compounding, and how it is like, here's for an example. The other day I was driving into work. Yesterday, I was driving into work, and I live right next to the highway. Like, I'm not right next to the highway, I was, a little ways away. So, but it's not very far. I just drive out there and I pull out on the highway, and then most of my drive is straight down the highway to work. And so as I'm getting ready to pull on the highway, traffic's clearing off, and the guy on the other side of the highway, he's getting pulled off. This is kind of, we're living very rural areas. So I pull out on the highway. Yeah, I'm driving this old Suburban. He pulls in behind me, and I'm flying down the highway, and it's just a nice straight shot. So I speed up to 55, and that's generally the speed that I go, 55. Early morning, Highway 30, going into Astoria is probably one of the most dangerous roads anywhere in Oregon. Like, there are so many accidents on this highway, it's just unreal. And there's lots and lots of wildlife. The elk and the deer are constantly crossing this road between Astoria and where I live. So I don't really speed. I do somewhere between 40 to 55, generally the entire way going in. There's lots of windy curves. There's no, there's most of the time you can't even get to 55, right? But on the way in, this dude who pulls in behind me, like about halfway, I guess I'm not going fast enough for him because he's flashing his lights every single time that I have a spot that I could have pulled over. And I'm thinking to myself, man, I don't know what world this dude lives in, but I am not pulling over. Like, I am doing a reasonable speed, going down the highway, going to work just like everybody else. I can see a quarter mile ahead of me, a half a mile ahead of me. I can see the brake lights of the other vehicles. Like, we're all going to end up in town at the exact same time. And yet this guy is flashing his lights and he's like, he's adamant. He wants me to pull over so he can get ahead of me. And I'm like, no, man, I'm not pulling over. I'm going to work just like you are. Sucks to be you. You should have left 5 minutes earlier, right? So I get to work and I'm feeling aggravated about this. Right? And I go into work and, how's it going? I was like, oh man, let me tell you about this. And I told him about this trip that I just drove in on, right? And when I was all done, nobody cared. Like, I realized, like, I just vented out there this idea of what it is that just happened to me, sharing in my experience, thinking that it was like, I wanted, like, to share in this emotion, I guess. I don't know, this pissed off emotion that I had. I wanted, like, to share in this experience or keep it going or something. And literally nobody cared at all about this dude who was behind me. And I got to thinking about it. It was like, any road rage story that I've ever heard anybody told, I had no care about either. Like, unless there was like an accident or something, but just being like, in an incident that somebody was driving their vehicle like an idiot or something, nobody cares. But yet, the negative energy that I produced and dropped onto essentially the office right there, because there was a couple of guys who, were already in the office when I showed up, and me sharing the story produced this negative energy right there within them in this discussion. So now I'm sitting there, and this negative, like, kind of feeling is in the air from the story that I had just told. And I can almost see it and feel it amongst the other guys as we're sitting there getting our morning going. Like, the griping and the negative talk was kind of flowing through the conversation as we were sitting there in that morning. I'm thinking, did I spark this? Did I start this with my story of what happened here? And so immediately, like, I kind of changed the gears. Like, I started talking about work and, joking around about, a funny experience that I had with a customer, and the guys started laughing, and I could see the energy start to change. And all of a sudden, like, having fun and, joking around and playing and, playing little games or whatever started becoming like, a little bit more of a positive response that was happening there amongst them. Because we always joke around, like every office, man, you always got guys in there who are jokers and laughing and doing stuff. And that's really where the energy started shifting towards, is getting back into that kind of positive aspect and then, enjoying the experience again. But I realized, just from my own discussion, just from coming in and carrying that energy, that I left that energy in the room. Like, I didn't leave it. I put it there and then had to be in it with them. Right? And I'm like, ah, crap. What am I doing here, man? Like, this is not going to generate a good time. Right? This is not going to be a fun experience here. how do I change this around? And so that's when I thought about it. And it was just like, well, start joking, start telling those funny stories about what happened, or whatever, and then get it to be in a more positive light. And sure enough, everything started to change. Well, this is the same energy that's carried throughout everything in life. It doesn't matter if you're in the office or if you're just conducting yourself at the grocery store or whatever it is you're doing. It doesn't matter. Right? If you carry a negative energy, you're going to immerse everybody around you within that negative, and then you have to live in it. You have to be in it with them. And then even somebody else who's carrying that, like you could say, oh man, I'm not into negative energy, man. I don't want to hear your story. I'm not going to, I don't want to be involved in this. Even if you're just in the same room, you're still collecting that negative energy, even if you're not participating in it. Right? This is important to understand. The moment that you recognize that and then change the way that you are interacting with people, like it's okay to tell the story. It's like, whoo, man, I had a rough one on the way in. He was obviously late for work. I'm glad I made it on time. Anyway, so what's going on today, right? Like that's the sort of attitude that keeps people in that positive experience with you. That's what keeps the positive coming, right? Like you think if you told a story about having this road rage experience, do you think somebody's going to come to you and say, hey man, I want you to work on this project with me right now? If you just told a story about how pissed off you were about somebody who was behind you, somebody has a project they need help with, are they going to come to you or are they going to go to the person who's being positive? And then you wonder, it's just like, how come nobody ever comes to me and says, hey man, how come I can't help out with things? How come nobody's asking me to network? How come nobody's, it's because you're carrying the wrong energy. How late do we want to go, guys? We're almost 3 hours into this live stream. My goodness. Incredible. All right, Stephen, one must believe that the actions could yield desirable results. Negative energy does not allow for this belief. Yeah, and that's really like, that comes from the idea really of manifesting things into your reality, is to literally envision it as if it has already occurred. That's one of the reasons why I think this channel actually did as well as it did, is because I never really saw it as anything other than what it was that I was doing here. Like, I wanted a channel in which that I could share information, have something of like a personal journal, and that was really the expectation that I had from it. Now, in my mind, I thought, man, it would be cool to do YouTube for real, right? But that's all I had. I didn't have, I need to do special camera angles and edits and graphics and all this stuff. And I didn't have a list of stuff. All I did was put out videos and then have it in my head, I would like to do YouTube for real. Everything else lined itself up. I didn't do any of that. I didn't try to meet George Gammon. That occurred very, as a natural thing from a shout out that says, hey man, you need to check out George Gammon. Then I gave George Gammon a shout out and things just started taking off from there. I didn't give that shout out thinking, oh man, I wonder if you'll invite me to tag along to the Rebel Capitalist. He didn't even have a channel at the time. He didn't even have, George Gammon he had 300 subscribers when I gave him the first shout out. He was so taken back by it. He was the one who contacted me saying, man, thank you for giving me the shout out and, pushing my channel. I mean, that's what George Gammon, that's how I met George, right? And so when I think about all the things that were in my life that I tried to get, I always put up walls of blocking somehow. I interfered in a way that made it not occur. It didn't matter what it was. If I was trying and really focused on it and deliberate and everything about it, I got to get it down this particular way, it seemed like I screwed it up one way or the other. But when I let go of when I let go of it all, when I just let go and just said, man, have fun, enjoy making videos, enjoy doing what you're doing, and everything else will just line up. It just naturally occurs. Even the buying of this house that I live in, I didn't really actually pursue the buying of the house. I fell into unfortunate circumstances in which that I had to move away from a house that I was renting, and there was nothing else to rent. I was in, like, it was rent moratorium happening. There was literally nothing to rent anywhere in Astoria. I had people saying, oh man, there's always a place to rent. And like people all over the country were searching for a place for me to rent here in Astoria. There was literally nothing. I had to buy if I wanted to stay in Astoria. If I wanted to stay in this county, I had to buy. And so I felt very much forced into the situation. And I think about the house that I ended up buying. It was, I kid you not, guys, it was literally the house that I had been describing before we bought it. I said, I want a big house out in my old neighborhood where I grew up that is easy to maintain and has a big front yard. That's exactly what I got. Like, exactly. There, like, I'm in my old neighborhood. It's a 4-bedroom ranch style home, single level. I got this gigantic front yard. It's the biggest front yard around. All right. It was everything that I envisioned, but I didn't line it up. It was like the universe was like, oh, by the way, you're getting kicked out of your house, and good thing that you had saved all that money, because now you're going to buy a house and you don't really have any other choice. And that was literally how it felt. But in my head, I did have this house. It was the same one that I had been envisioning the entire time. I did not attempt to get it. The universe literally forced me into it. It was either, hey, if you want to stay in Astoria, you're going to have to buy a house because there's nowhere else to rent. This is how it lined up for me. Now, I think to myself, way back when I started the channel, that day put me on the path to be able to buy this house today. Never once did I think it was going to be what was going to do it. Never once. Right? So when I learned this is how it works, this is how really the greatest secret of the world works. It comes from your imagination and your feelings, right? If you can think of it and feel it as if it's already there. And I know this is probably the hardest thing for most people to try and rationalize when you are in lacking or you are desperate. When you have those feelings, that is literally what is repelling what it is that you want. And this is how come most people end up suffering and feeling loss or feeling miserable, is because they are so desperate for it that they are literally putting up walls of blocking, not knowing that whatever it is that they want is already there. It's already there within them. It's already inside of the feelings that you carry and the meaning that you give everything. And once you carry it for real, the universe has no other choice but to line up for it. Very much like I got into this house. I didn't even, guys, if you could go back and watch the videos on it, you would see that I was scared to buy this house. I was scared. I thought for sure that the interest rates were going to go up and house prices were going to crash and I was going to be underwater and all this other stuff. And so many people told me that. And even today I get people who are telling me, oh, dude, just wait and see. You made the wrong decision 4 years ago buying your house, right? It was probably one of the greatest decisions I had ever done. I have more equity in this house now than I have in any other portfolio or anything I got. Like, this house has more equity in it than anything else because of how much it went up and the down payment that I put on it. It's probably been one of the greatest experiences for my family. My boys each have their own room. They go to school at the same school that I went to. There's some of the faculty that is still there from when I went to school there. This is one of the greatest experiences that I had in my head from a long time ago that actually manifested into reality, and I didn't do it. I didn't do it other than having the thoughts and feelings, this is what I want. And I didn't really think of it any other way. I didn't really feel about it any other way. I didn't feel like I could live anywhere else. I felt like I lived out here, you know? And so once you see that part of it, once you recognize that part of it, the hardest thing to do is just to enjoy the experience of getting there. To already have the feeling of whatever it is that you want, whatever it is that you are desiring in your life, the moment that you feel like you already have it, that feeling of want and desire, it goes away, and then the universe lines up for you to have it. The moment that you want it, like desire it, deep-rooted want and desire, it's saying, I do not have. I am lacking. I do not have the energy within me that feels like I've already acquired it. It is somewhere else out there. And by having that out there, you don't have it within you, but it is within you. It's already there. See, let me see if I can describe it in another way, like winning the lottery. Right? Have you ever seen anybody get one of those fake tickets where they believe that they won $10,000, but they didn't? It was just a fake scratch a ticket. It's one of the worst jokes you could ever play on somebody. What a horrible practical joke. But something very interesting that takes place in that moment, that people really believe that they had won all that money. Like for a moment there, they have the feeling that they actually got it. That feeling that they actually have it, if they were able to carry that for real in their feelings, in their subconscious beliefs, if they were able to continue to carry that feeling, it would line up for them. It may not be through the lottery from the means that you think. It could come from something else, some other sweepstakes or something you didn't even realize was going to happen. But if you're carrying the feeling as if you had already acquired it, it has almost no other choice but to line up for you. Magical things can take place like this. And I don't mean to be like the crystal gripper, hippie type individual, whatever, right? Like, a lot of people is like, dude, get off of like, the drugs or something. This is reality. This is how I'm able to acquire so many things into my life, is just literally by thinking and feeling, thinking and feeling like I've already acquired it, that I already have it. Here's something that's interesting. Like, it happened when we were at the Mariners game. A lot of you remember the story of how my dad and my brother and my son, we all went up to see a couple of the Mariners Red Sox games. And now, the first day, we were 30 rows back up underneath the upper level so that we were in the shade. Great game, awesome. 30 rows back behind home plate, great view. It was awesome, great time. But I wanted to be, for the second game, I wanted to be in a position in the stands in which that I thought that a foul ball would land, right? Because Freddie really wanted to catch a ball, right? And these, you're at a major league game, there's thousands and thousands and thousands and thousands and thousands and thousands of people. And the balls fly everywhere, right? I mean, the major league games, the balls are constantly going out there into the audience, out there into the fans. And as these balls are flying, and Freddie's getting excited every time one of them goes up into the air and it starts going into the crowd anywhere near us, I mean, he's getting pumped up and excited. And I thought, and I'm thinking, okay, just enjoy the game, man. Just enjoy the game, enjoy the experience, enjoy everything about it. Even if he doesn't get the ball, he got to meet players, he got signatures, all the other stuff. It was just an awesome feeling. Everybody's having a great time. The game is going great, right? And Trevor Story had done this a couple of times. He's the second baseman, or I'm sorry, the shortstop for the Red Sox. He'd done this a couple of times, that after the last out, he would walk up and he would toss the ball out over the third base line into the crowd, right? And so he had done this, and it flew over our head and it landed kind of to the guys behind us. And Freddie kind of sat down and he went like that, and he kind of like, looked bummed. And I tapped him on the knee and I said, dude, stay positive, man. You'll get a ball, right? Just believe it. Just believe deep down inside that you're going to get one. Just know it. And I kid you not, it was like the very next inning, right? Last out, Trevor Story walks up to that third base line, and he's looking into the crowd, and I'm wearing a Red Sox hoodie, right? It has a big, got the big Red Sox on the front of the hoodie. And I'm only 7 rows back behind third base, right? And so he walks up to the third base line, and I'm looking straight at him, right? And I'm pointing at Freddie like this, and I'm like, like, get this kid the ball. Trevor looked straight at me and he tosses that ball up in the air, and I kid you not, it came right to me. I put that ball into Freddie's glove, and I was like, I knew it. I knew it. I knew we were going to get it. I knew that was the right spot. I knew it was going to be, I knew it was going to happen. I just felt it. I felt it deep down inside from the moment that I bought the ticket that it was going to happen. And even if it didn't happen, it was okay because we were having such an awesome time there. But I knew it was going to happen. And sure enough, Freddie got that ball and he was so happy. He wanted to get it signed, but the players all just like bailed out as soon as the game was over. But God, what an incredible experience, right? And so just knowing that that's the type of feeling and energy that you have. It didn't matter if we got the ball, right? It was the feeling that we were carrying. We were having a good time, enjoying the experience, having everything that was just lining up was just awesome. And that ball coming in was just the icing on the cake, right? It was cool. Thank you so much, The Wealth Building Journey, for the $2. The secret of manifesting continuous compounding. Wow, look at all these comments. Okay. You ready for next week? What's going to happen next week? When will this all fix? It won't. The only thing you can do is figure it out for yourself so that you can make the best decisions for yourself. There's no fixing it. Fixing it is not an option. You know what is an option, though? Ending the live stream. We're 3 hours. We're almost 3 hours into this live stream, guys. Holy moly. 277 people watching. 458 likes. Thank you so much for hitting that like button, everybody. Thank you so much for the $46.90 in super chats. You guys are always so very supportive of the channel. I just can never thank you guys enough for all that. And I love being out here with you. 500 likes, he can see his family. Yeah, we get it up to 500 likes and then we quit. No, you get it up to 500 likes and I super appreciate everybody because, this is the easiest, like I said, it's the easiest way to support the Uneducated Economist. Hitting that like button, commenting, sharing the video. This is really how it's done. And promoting the channel is, thank you. Like, we're getting this message out. I think getting the message out for people to internalize so that they could be making those best decisions for themselves. This is really what the goal of the channel is. I'm going to, keep figuring it out so that I can learn how to get this out, how it is that I can, whether it's a book or a course or just continuous videos or something out there. This is my passion. This is what's driving me. I know it's helpful and useful to people out there, and I'm going to continue to do this because I just love it so much, All right. Go kiss your babies. It's all failing, right? Well, yeah, for a lot of people it is. Save your nickels. Yeah, absolutely save the nickels. And here's something that I learned. 2024 nickels, there was not a whole lot minted last year, and they are selling for a premium. So if you can find your 2024 nickels, hoard those things. Hoard them. All right. I guess the truth of the matter is we will all die alone. Yeah, that's kind of true. Is Trump to blame? Absolutely not. In fact, that is the furthest person in the world you should be blaming for anything. You can look at what it is that he is doing as an actual benefit to the Federal Reserve, because what he is doing is he's raising the credible threats of tariffs on inflation expectations, right? And that right there is definitely a benefit to the Fed. Really, I don't know. Like, I'm going to end it here at this. We're going to end it at 3 hours. But really, I'm going to kind of say it like this. When it came to the tariffs and the credible threat of tariffs, everybody thought it was going to be like a warlike effort. And I said, I don't think so. We have to wait and see. What tariffs? Exemptions, workarounds, What is really going to be the actual number of tariffs? What's that percentage? This is very questionable. And then something called the taco trade came out. Trump always chickens out. And I thought to myself, man, does that not line up with exactly what I was saying about what tariffs? Now, when I do think about how this affected monetary policy, it totally benefited the Fed because it raised the neutral interest rate, making it ever closer to the Fed funds rate, making the economy less restricted, and the Federal Reserve doesn't have to use their actions, they can use more of their words. Totally benefited the Fed. So, is it Trump's fault? Yeah, why not? Blame him. Blame everybody. You can blame them all, But is it him specifically doing something? Not really. Not really. It's raising the credible threats of tariffs and the idea of inflation expectation, which is what the Federal Reserve wanted anyway. All right. I ate half a cow during the show. Yeah, I can believe that you could have, man. I mean, we've been at it for 2 hours, 59 minutes, and 11 seconds now. We're going to end it at exactly the 3-hour mark because you guys are so awesome, so generous, and so beautiful to be here at the Uneducated Economist chat so that we can break this stuff down, understanding it, all the discussions that we have, all the ideas, all the possibilities. It's all discussed here, and this is the way we do it, by having this conversation, by internalizing it for ourselves and then hopefully seeing it for ourselves when it comes to that moment, when it comes time to make the decision. I smoked 2 giant doobies during this show. You guys are awesome. Thank you for being here. Uneducated Economist, you let me know.